they're not fairly valued. So as we put them on the side and put them as separate entities, I think you create a better value that way, and then you cash out a little bit and put management under pressure.
Are you looking at IPOing any other units or portfolios?
When you look at our business, we have businesses. We have India, we have our hospitality business, we have Turkey business, we have another business in Saudi Arabia. So the reality is that you can take all these businesses public at the right time. I think within the coming 3 years, we'll probably have
Order
India
submitted.
going public. We'll probably have
Order
hospitality
canceled.
as well going
Order
separately to the public route.
But so how much bigger will you be if I speak to you? And I hope to speak to you before, but if I speak to you in 5 years, how much will your holdings be worth?
Order submitted. Order canceled.
In value 20-25% on an annual basis.
Order submitted. Order
my
submitted.
management and my
Order
boards really
canceled.
put that
Order
as a focus.
canceled.
And to be honest,
Order
Order
submitted.
Order
canceled. Order canceled.
Make sure that we have the right people to do it.
Order
And we do this day and night.
Order
That's really how we do
canceled.
business in the
Order
But that's acquisitions or that's organic growth?
I would look at organic growth. If we would talk
order
about
canceled.
acquisition, which we have not done much of, I'm expecting that we do more acquisition in the coming 2 years.
Mohammed Albar, thank you so much. Coming up next, going from bricks and mortar to clicks, we talk Mohammed Albar's big push into e-commerce and how his company Noon could become the Amazon of the
Order submitted. Order canceled. Order canceled. Order submitted. 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 Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted.
And so how do you stay relevant?
I think staying relevant, first of all, I have to talk to my kids all the time. And I learn from them because, I have a little girl that sells jewelry to women in Korea out of Dubai on her Instagram. I mean, what type of world is this? So therefore, I think all of our business, from real estate to retail to hospitality.
Order
the
submitted.
digital scene is changing all that. So if we talk about e-commerce specifically,
order
if we talk
canceled.
about Net-a-Porter, it is just moving your business to the digital
Order
scene.
order
The whole
canceled.
economy is moving that way, from healthcare to
Order
education
canceled.
to retail. So therefore, I think we just want to be relevant. And I don't think there's any conflict, because at the end of the day, there ought to be a collaboration or connection between the real world and the physical world. And can we really try to find a solution and work them together and stay relevant in our business?
But so how much of your sales will actually be done on your e-commerce platform in 5-10 years? And in general, for the Middle East, are you a step behind in actually selling on e-commerce? And so is the potential much bigger than here in Europe or in the US?
Well, remember, I mean, when I look at the Middle East right now, I mean, e-commerce is between 1.5% to 2%.
Tiny.
It's just
Order
tiny
canceled.
compared to the rest of the world. So
Order
there is
canceled.
room for all of us to grow. Where will this be? I think it will go much faster than the rest of the world, and it will get into the 10-15% quite fast, again, because of the demographics of the region. So we owe it to our society, we owe it to our 300 million
submitted.
Middle Eastern Arabs, that there ought to be a native organization that looks after the
canceled.
sector and participate and learn and serve.
Order
And are you nervous at any point that you're going to head-to-head with the most successful retailer of all times, Amazon?
Well, Noon, of course, it will be an ecosystem. And am I nervous? Of course I'm nervous. I'm nervous from everybody. In my real estate business, I'm nervous. In my e-commerce business, I'm nervous. In my Net-a-Porter business, nervous, because competition is severe and markets are open. Anybody can come in. The big players are going to come in. Some of them came already. More are going to come to the region. But I am from that part of the world, and I think it's our duty to participate in the scene. And remember, we as Arab businessmen, we're a bit tribal,
canceled.
which means that I am from this society. I have a duty that I get into business and be aggressive and achieve the numbers, achieve success. But that's a duty that I feel responsible for, that competition is good for the consumer in the region, rather than one player come and controlling the life of our customers. I think it's fair to have competition and let the customer win at the end of the day.
Okay, but how do you decide? I mean, how will you go against Amazon? Do you have to convince retailers to sell on your platform instead of Amazon's platform? Or is it a price war? I mean, how do you see the kind of the fault lines?
Order submitted.
We are working with the local retailers, and we are their partners. Now, how other international players they do it through sourcing overseas or working some other methods, that's their business. But we differ is that our partners are the local retailers. Maybe our margins will be a little smaller, but that's okay. We'd rather win on the long term rather than alienating the local retailers. Now, will there be a price war? Well, the past 2 months there's a price war. Customers are winning. Everybody's 20% or 10% cheaper on some of the product. So I'm so happy that people in my region, they don't have to buy milk for their kids at 10% more expensive. There was one operator or one monopoly controlling, the human life. I think this is good for all of us. So of course there'll be a competition. But the amazing thing is that the world is open. So much new technologies are being provided to everyone that want to go into the scene. But are you planning long term? You have good people with you. Are you serious about it? Are you willing to provide quality service?
Is it the service or is it the products? How does the Middle East actually shop? What's selling at the moment and what will sell in 5-10 years?
Well, if you look at the mix of what's happening on the e-commerce scene, it's not much different from what's going on in the world. People want delivery, fast delivery. People want quality.
Will they pay for the delivery?
For the time being, we're subsidizing delivery. Because, as I said, people are just learning the art of e-commerce, and that's what global companies are doing. They give it to you for free first, they get you used to this way of life, then later on take a little bit of margin, maybe control market, the usual trick. But what I'm saying is that people want it all. Want quality, want value, want consistent, want delivery time that's fast, and we want the product that they want, which changes from 1 month to another month. And therefore you have to provide that, and then get ready to provide the new thing that might be happening next month.
Okay, how important is market share, and how important is market share right at the beginning so that people get used to your platform and not Amazon's?
Market share is very important, and,
order
at the beginning
canceled.
you have to be aggressive, and you have to probably provide the best service ever. You will be cutting prices as usual because we see it.
Orders
It's a live competition. There's nothing wrong with that.
Order
but the good
submitted.
thing is that the market's big enough.
Order canceled.
Two players can come in. But imagine if you do business in UK and there is only one operator. How fair is that to your family?
But isn't there only Amazon
order
here?
submitted.
Well, there are many other players, I think, in UK as well. I prefer that
order
more than
canceled.
one player in a market. And in the Middle East, there will be more than one player and will be one of the major players in the market.
Up next, we talk the leadership skills it takes to create both the world's largest mall and the tallest building in the world. More with Mohammed Albar next.
Canceled. Order submitted. Order submitted. Order canceled. Order submit. Order submitted. Order canceled. Orders submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled.
MR Properties has grown more than threefold since 2011 and expanded heavily in the Middle East and North Africa despite political instability in the region. So what kind of leadership does it take to shepherd a global company through turbulent times? Well, Mohammed Albar, chairman and founder of MR Properties, is here. What kind of leader are you? Throughout the program, we were talking about encouraging your leaders, your regional leaders, and also your portfolio managers to be aggressive. Do they always need to be on their toes?
Number one,
canceled.
they have to be relevant because the change that's taking place in the world.
Order submitted.
And the other thing I like is that I think we all have to believe in the reset.
Order canceled.
And do we really act? I mean, that's, so we have to be relevant. We have to
Order
act.
submitted.
We have to have discipline. We have to believe in the best
Order
people,
submitted.
and we have to care about society.
Order canceled.
These are the elements that I really depend on to manage my business.
Okay, but what does it mean being relevant? Because in more traditional times, you could ask a customer what they wanted and say, okay, I'm relevant, but now the change of pace is so fast.
Well, relevant is that, are you watching social media daily? What's going on with your customer?
Order canceled.
And what's going on with your business? There's no more, I'll do a research and I'll wait 30 days. How alert are you? And how alert about how your customer feel, or alert what's going on to the industry, what's going on with politics, what's going on with the economy, what's going on in new tools of management, how fast can you go? So I think, are you awake?
What do you need to be awake for more? Is it for your clients, or is it politics, or is it how your business interests are going?
Canceled.
Well, it's about my customer, number one. my
Right.
people. Number two, the society, what's going on in politics, what might happen to interest rate. You almost have to have all that construction risk in my business, what's going on in technology, what's going on in digital. You almost have to be alert of all
order
this
submit,
to,
order
but number
canceled.
one, people.
Order
And then you have to
submitted.
make sure that you share with
Order
them
canceled.
this environment, and are they fit in this environment?
So what does that mean? What do you see your role? Are you putting the fire under your manager's feet to kind of keep them going, or do you micromanage?
Order submitted.
I don't think I micromanage, but there's a situation where I do have to go and
Order
micromanage.
canceled.
And I think that's we should be able to go down in case we want to. And remember, I came from my mom's kitchen. I used to work in my mom's kitchen when we were all 13 kids living in one room, So I know how to do that. So I can pull back and be the chairman of the organization. But if there's need to move in, I can comfortably move in. But I have reasonably good qualified people with me. But I really think that I'm the target creator. I'm the guy who does the monthly performance reviews. I'm the guy who push the limits. I want people to work hard because I think we as human beings, our productivity is still low.
I mean, you spend a lot of time in property because that's where you came from. That was the first company.
Sure.
But what excites you the most in all the others that you're doing? So hospitality, retail, e-commerce.
I would say e-commerce excites me a lot because when I look at how the digital world is changing our lives, I come back to my real estate business and I say, maybe this office is null and void. Maybe this is all not required anymore. But also, if you look at the digital guys and you see how fast they work, or the process they use, or the age of people in these offices, therefore, I really believe that the younger generation are running the world, and they run it extremely well. So much learning in the digital side of the e-commerce. But I think my investment in MEVP, which is a private equity firm that specializes only in digital and technology in the Middle East with almost 80 ventures, that's amazing learning about what's going on in the Middle East as well, and the industry that are about to come.
Do you focus a lot on diversity for your companies? Is that important?
Yes, very important, very important. And I think it's happening naturally. I mean, we don't even have to do it anymore. It's just naturally, that's how.
So
how most
do you have
of our
metrics?
We have metrics, we have KPIs for that. But as I said, it's so nice that it's really embodied in the organization. It's happening automatically, and I like that.
Do you think it'll increase with time, or are you going to see more female workers?
Well, the female workers are really taking charge. I mean, if you look at the people who run my organization, most of our organization, I would say most of our organization, our food boys have to have more of that. But look at our government. Highest percentage of senior people in government anywhere in the world.
Mohammed Alabar, thank you so much for joining us. He is, of course, the chairman and founder of MR Properties.
Thank you so much.
Thank you.
Thanks.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London alongside Matt Miller in Berlin.
Good morning, Anna. Today the markets say, feel the animal spirits. European futures point to gains as the relentless surge in Chinese stocks shows no signs of waning so far. The cash trade is just an hour away. Here are your top headlines from the Bloomberg terminal. Global coronavirus cases top 12 million, with U.S. infections rising by a record again. As Vice President Pence says schools should reopen, the Fed's Raphael Bostic warns about the hit to consumer sentiment. China's 8-day stock market frenzy pushes the Shanghai Composite to its highest level since 2008. That's after mega-cap tech took the Nasdaq to another record overnight in the U.S. Plus, speaking of tech, SAP's revenue begins to recover from the pandemic-fueled slowdown as Europe's biggest technology company sees a bounce back in software deals throughout Asia. Just under an hour away from the start of cash equity trading in Europe, let's take a look at where futures are pointing us right now. As I said, we've got gains across the board, more than 1% on DAX futures right now. FTSE futures are up about 0.6%. Take a look at U.S. futures. They have been down this morning, though only slightly, and we're seeing Nasdaq futures tick up here.
Order submitted.
So S&P and Dow futures down, but only 1/10 of 1%. Anna, what have you got?
Order canceled.
Let's have a look at some breaking news, shall we? We've got some numbers coming out from Rolls-Royce, the engineering business, the engine maker here in the UK. Say they're making good progress on the Trent 1000 fixes, so some of the issues they were having with one of their engines there, giving us details for free cash flow and cost mitigation actions that they themselves are taking. So £1 billion worth of cost mitigation actions for 2020. They say that those actions are on track. £300 million of those cost mitigation actions have been achieved in the first half. So this is all about self-help. What can businesses do to help themselves through this extraordinary time? They've made good progress executing one-off actions. Of course, one of the things they've been doing is looking at job cuts. We heard about that some time ago. Cash flows significantly, they say, affected by COVID. So those are some of the headlines we're getting coming through from Rolls-Royce. We're getting a few lines coming through from Persimmon and the house building sector. I just mentioned this because we had that stamp duty change. We're going to talk a lot more about whether Sunak saved summer, which was one of the lines going around here yesterday in the UK, in reference to what the Chancellor is doing. We'll get to some of those lines from the house builders as well. Let's get to the GMM, though. This gives us a nice wrap of what we've seen through the Asian session. You mentioned that some of the US futures picture looks fairly flat, mixed, doesn't it, right now, Matt? But the strength we are seeing coming through in Asia, once again coming through in the Chinese market, clear to see the CSI 300 up by just over 1%. Once again, we see some strength coming through in the Taiwanese dollar. We're also seeing strength in the yuan, increasingly testing that 7 to the dollar mark. But investors then, Matt, clearly putting aside concerns around escalating virus infection rates in the US, death rates in some places, and indeed not particularly worried about geopolitics, not this morning at least.
No, absolutely not. Let's get over with the incredible rally in China to follow, to Laura Cooper, our Bloomberg MLive macro strategist. And this is especially interesting, I find, Laura, because we've seen, if today's gains hold into the close, the longest streak of gains in Chinese stocks since January of 2018, and that didn't end well. What do you make of the, can't lose rally so far?
Well, I think certainly that we are seeing just speculation is really just the rally behind kind of what we're seeing in Chinese stock markets. I think, yes, this is kind of bubbling up to the surface, some memory of the 2015, 2016 bubble, and that's when we saw stocks, crash 150% over that time. But I think really there are some key differences that do suggest that this rally does have orders submitted. I mean, back then it was the surge was largely fueled by rapid build-up in debt. We're not kind of seeing the same leverage growth that we are seeing now. Back then, valuations are more reasonable. And then just looking at kind of the growth backdrop in China, I think it's one of the only economies to really potentially grow this year. Certainly, there is kind of that appetite for
order submitted. Order submitted. Order canceled.
Cycle. I mean, clearly
canceled.
We're in a period where the economy is expanding after the sharp contractions. So I think clearly that's kind of providing more of a tailwind to China. So I think there is still some scope for the rally to continue.
Yeah, scope for the rally to continue then. Good morning, Laura. But does that require some fiscal stimulus in the US? Do US assets need more fiscal stimulus? Lots of people talk excitedly to us about European stocks or maybe the euro in connection with the recovery fund here. Does the US need a little more?
I think that is the case, because certainly when we look at what's happening within the price action, we see this positive correlation between U.S. equities and Treasury yields, which is not something we would typically see. I mean, money getting more expensive, we wouldn't expect to see kind of stock rallying, but that is what we are seeing. And clearly that tells us that sentiment or this confidence in the economic outlook is a key underpinning of the rally, and that is crucially dependent on policymakers. Now, central banks have kind of done a lot of the heavy lifting so far, but when we look to the jobs recovery, we're having extended benefits in the U.S. expire at the end of this month.
Canceled.
The Congressional Budget Office anticipates that about 5 out of every 6 workers on those schemes are actually seeing their incomes higher than if they didn't have that, and that is kind of a key underpinning of why we're seeing kind of consumer demand hold up. So when you take that and we have an
order canceled. Order submitted.
And then as well, when we look at just activity gauges in the U.S., they are stumbling. And I think crucially, we need kind of those direct injections to those small and medium-sized companies in these exposed sectors to ensure that they can actually have a lifeline to provide employment opportunities for these workers. So crucially, that's more on the fiscal front that I think providing cheaper loans or challenges in directly financing companies from the central bank's perspective.
All right, Laura, thanks very much for joining us this morning. Laura Cooper there is Bloomberg and live macro strategist for us out of London. The question of the day, do U.S. assets need more fiscal stimulus? Reach out to us in the MLive team with your answer. Just type IB plus TV go on your Bloomberg terminal to contribute to the conversation. Coming up on the program, we'll speak to the CEO of Siemens, Joe Kaeser, as he heads into an EGM, an extraordinary general meeting to finalize the details of the conglomerate's energy spin-off. That's at 7:45 UK time.
Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. 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 Order submit. Order canceled. Order submitted. Order canceled.
Welcome back to the European market
Order
open.
cancelled.
Just 50 minutes ago until the start of the cash equities trading day, the Asian session dominated once again by Chinese gains. Let's get a Bloomberg First Word News update for you. Here are the top stories that we're covering here at Bloomberg this morning. Australia is suspending its extradition agreement with Hong Kong. The move by Prime Minister Scott Morrison is set to further inflame tensions with China. It follows Canada's similar decision last week. Australia will also give skilled Hong Kong migrants 5-year visas with a pathway to permanent residency. Morrison says the new Chinese security law represents a fundamental change. In Israel, critics say Prime Minister Benjamin Netanyahu is consolidating power to undermine democracy. This week, Parliament approved an emergency law that curtailed its own powers. It allows the cabinet to take any decision deemed necessary to curb the spread of coronavirus. Netanyahu says these emergency measures are necessary. Joe Biden will call for a moderate approach when it comes to reviving the U.S. economy. Sources have told Bloomberg his plans would shelve some of the more ambitious proposals being pushed by progressive Democrats. The presidential nominee plans to deliver the detail in an economic speech today. Global news 24 hours a day, on air and at Bloomberg Critic, powered by more than 2,700 journalists and analysts in more than 120 countries. Matt.
All right, now Chancellor Angela Merkel has urged EU members to compromise on an ambitious recovery package. The German lender told lawmakers in Brussels a common spirit is needed to confront the biggest challenge in the bloc's history. Her comments pile pressure on states who have resisted a proposed €750 billion fund financed from joint borrowing. We're joined now with William De Wilder, chief economist at BNP Paribas, and I'm sure, you know, what Merkel is saying there is fairly obvious. There's got to be some unity, I'm sure, in order to overcome this. What kind of recovery do you expect, William? Because surely there will be uneven recovery in terms of national recoveries as well in the EU.
Order canceled.
But definitely, we're in the mechanical part now, and really towards the end of the mechanical part, I would say. That means that with the end of the lockdown, activity picks up, demand picks up, and now we will be more going to a slower pace of quarterly growth. The differences between countries is, of course, going to be very much dependent on the characteristics of the country. Italy has been suffering more, Germany is more export-oriented, so you can expect indeed that there will be, at the end of the year, a quite significant gap appearing in terms of cumulative GDP growth between the various countries.
Order submitted.
Good morning to you, William. I want to ask about unemployment and where you think that heads, given what you just said there about the path of growth from here. Where do you see unemployment rates peaking?
Well, it will continue to creep up. As we know, it's a lagging indicator. What happens is that, and that is a concern I have, is that we have a lot of companies just holding in there for the moment. And if you do not have enough of an expansion, that they will be forced to cut back anyhow. What we have also seen is that companies that are working in an environment with a long lead time, they have taken far more deep cutting measures. Think of Airbus, just to mention one company. So what is also striking is that if you look at the PMI data, for instance, that rebound that you see in manufacturing and services has not been accompanied by a similar rebound in the employment data. So all this, for me, paints a pretty bleak outlook for the labor market that could then act as a headwind for consumer spending.
Hate to use this question, but it seems like the perfect time, because Anna sent me this story, and I'm sure she wanted to ask this morning, a story by Carolyn Look and Alex Weber, but it makes sense to ask you about it now in relation to the employment issue. There is an idea being floated that governments will take stakes in smaller and medium-sized companies. Of course, during the last financial crisis, they bailed out the big companies and the banks, and that led to real backlash. What do you think about, you know, a more novel, kind of outside-the-box approach to saving companies from bankruptcies, saving employees in their jobs? Is that the kind of thing that could happen, or is it just too brilliant and unique for any bureaucratic organization to actually enact it?
Well, it's very nice. You put the question in a very nice way. I think referring to the European Commission work on equity repair need, it is just massive for European companies. And I think in particular the small and the mid-sized one. So in addition, research has abundantly shown that when companies are carrying too much debt, that they will invest less because they want to pay back the debt. So equity repair is very important. Now, the idea, I think, is great, but the proof is in the eating. What I mean is that what does it entail for the governance, how it will exactly work, at what price, and also at what price will the state subsequently be able to sell the position. So I think these complexities should not deter us from the necessity to work along that path, and I'm really in favor of that.
Order submitted.
Let complexity not deter us. William, thank you very much. Stay with us. William Develder, Chief Economist of BNP Paribas, stays with us here on the programme. Lots more from William coming up. And in fact, what we're going to be discussing is the road to recovery. Italy's finance minister leaves the door open for tapping the euro area's bailout fund. More from that exclusive conversation. That's next. This is Bloomberg.
Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order canceled.
We had to be the first to take the number of lockdown measures that then other countries followed, and which have been essential for containing the virus and also to allow us to reopen gradually the economy. Also, our economic response have been bold. We are aware that we might revise. There is a risk of revise our forecast, but the data we have so far, the indicators tell us that the possible downward revision will not be so big as other forecasts seem to indicate. So we expect so far to be closer to our forecast, and now we are working on the phase two, both at European level and the national level.
The role of states in economies is increasing all over the globe because of the pandemic. But in your case, in Italy's case, how do you reassure investors who think that state control leads to inefficiencies?
state has to take a stronger role to protect the economy, to bear losses, to inject guarantees or sometimes even capital. But we will do this only when it's necessary, as far as it is necessary, and overall our line it has to be temporary when needed.
The Frugal Four are still, worried about mishandling of public funds. Can Italy do anything to measure success, to have a commitment that you won't deviate from? Is there anything that you can negotiate with? Common sense doesn't always prevail.
The problem of making a good use of the EU funds is a problem of everybody, of course. There are not countries which are supposed to be where this problem is bigger than everybody. So we all have to make the best use of these resources. And by the way, these resources will be based on a mechanism which is very similar to the cohesion money, which have a mechanism which makes the resources dependent on the concrete implementation of projects. So you need to have a concrete project. The project has to be, of course, there is a positive ownership of member states in defining their plans, but the plans have to be coherent with the semester and with the common goals of the EU. We think that the Commission proposal has struck a right balance between grant loans, the dimension. We were with other countries for an even bigger fund. So we will, of course, oppose any attempt to water down the Commission proposal. We will support the Commission proposal as it is. And as far as the timing, I think that everybody's aware that timing is essential. So we have to conclude the negotiation by July, and I'm confident that the negotiation will be concluded by July.
That was Italy's Finance Minister Roberto Gualtieri speaking to our colleague Francine Lacroix. William De Velde, Chief Economist at BNP Paribas, is still with us. William, he also went on in that interview, the Italian Finance Minister, to talk about whether Italy would tap ESM funds and said there's no stigma attached to using that credit line. It doesn't come with many of the conditions that it previously might have done. What considerations does Italy need to make then when deciding whether to tap this and other sources of EU money?
But I think on the ESM, it's a matter of convincing the domestic audience that there is no stigma. And then, if it feels relaxed about that, it should go ahead, of course, considering the extremely cheap funding conditions. I think the other matter, as the Italian finance minister just said, is what's going to come out of the European summit and what will be the conditions and what type of agreement. I think what we've seen is that pressure has been piling up. Everybody has been visiting the Netherlands in the recent past. And as Lagarde has mentioned, probably not next week, but then at least in July we must have an outcome, and it's crucially important.
It'll be interesting to see who the next Eurogroup president is, William. What do you think is going to be, whoever it is, what do you think is going to be her most important job?
Well, at the risk of sounding too negative or even paranoid, I think the key question is, what do we do next time? Next time means when you have another recession coming. Every so many years you have an economic recession. What is the reality today? ECB is at the zero lower bound with a huge balance sheet, keeps on growing. We have budget deficits having gone up significantly. That GDP up 20 percentage points of GDP. So what do you do when within 5 or 10 years' time there's another recession? And I think the way that fiscal policy is going to be handled at the Eurozone level is going to be the big one to agree upon. At what pace do we want countries to scale back the budget deficits? And how do we react next time around?
And so do you see the recovery fund as a precedent and not as a one-off?
the recovery fund, the way it looks like now, is that it's a one-off. And that, I think, is politically realistic, because if you would present it as a precedent, I think it would be even tougher to come to an agreement. At the same time, once we have done it, I think we will do it again, and that is something that gives me hope.
Let me just finally ask about savings rates. They've been higher here and higher in the U.S. as well. Is that something that you think will turn around as the coronavirus spread eases?
Sadly, there was one word in your question I did not get, so could you just repeat the start of the question? I'm sorry.
Just got 20 seconds here, William. Do you think household savings are going to ease from these peaks?
Yes, oh, definitely. But it depends very much on the labor market. What you have to avoid is that forced savings would not be tapped because they are turned into precautionary savings. And this is something that we have to be very mindful of.
Okay, we'll keep an eye on those savings rate. William, thanks so much. Important question to get in there at the end. William de Velde, Chief Economist at BNP Paribas, thank you very much for joining us. Just hearing some lines from Rishi Sunak about how concerned, how anxious he is about the public finances. Sunak tries to save some of them, the Chancellor here in the UK pledging billions to get Britain through the next few months. But our next guest says the measures could trigger rapid unemployment. We'll speak to NIESR's Jagjit Chadha. That conversation about the UK coming up next. This is Playback.
Order submitted. Order canceled. Order submitted. Order submit. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submit. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submit. Order canceled. Order submitted. Order canceled. Order canceled.
Welcome back to Bloomberg Markets. This is the European Open, 30 minutes away from the start of cash trading. You can see European futures here are up. DAX futures gaining almost 1%. FTSE futures gaining a little bit more than 0.5% right now on, well, partially on the rally that's rolling around the globe. Really, the Chinese stock rally is on fire right now. 8 days in a row of gains for the Shanghai, Shanghai comp. You can see there right now up 2/3 of 1%. That's the longest streak that we've seen since January of 2018. The Hang Seng is down a little bit. And on that note, I want to correct a headline from earlier on, just about 10 minutes before 8 here, so 10 minutes before 7 there. We put out a headline that said Hong Kong found at least 47 cases, 47 new local coronavirus cases. This according to HK01, the news site HK01. That has now been corrected to 16. So Hong Kong has now found at least 16 local virus cases. That's substantially fewer, of course, than 47. This according to the news site HK01. But since the HSI moved on that news, we thought it would be important to issue that correct as well. Anna?
Now, let's talk about what's going on in the UK then, Matt. Rishi Sunak is trying to save the summer. UK Chancellor Rishi Sunak has unveiled £30 billion of tax cuts and extra spending to support the country through the next stage of the pandemic. Chief Secretary to the Treasury, Stephen Barclay, told Bloomberg the plan was about avoiding economic scarring.
Ultimately, it's about protecting jobs, supporting those who lose their jobs, getting the skills and the coaching to get them back into work, and creating jobs by bringing forward, accelerating a number of our infrastructure programs, getting confidence into particular parts of the economy. So we protect the jobs, we support the jobs, but we also create jobs. That's the best way of avoiding the economic scarring as a result of this health pandemic.
We're joined now by Professor Jagjit Chadha, Director of the National Institute of Economic and Social Research, the NIESR. Jagjit, very good to speak to you. So when we were listening to the Chancellor yesterday, he even started his speech when he was going to start making these announcements. He even started by saying, look, I know if I end the furlough in October, people say it should go to November. If I end it in November, people will say it should go to December. There was never going to be a good time to end the furlough. So did he do a decent job of that?
I think the way to think about this is why do we go into lockdown and why do we have to introduce the furlough? And the deep reason is the tragic effects of the COVID-19 virus and the need to limit the spread in the country. That need to limit the spread meant we had to say to large numbers of people you shouldn't go to work, and that itself prompted the economic contraction that we see, with labour being withdrawn from the workforce and many consumers holding back on expenditure, and that's led to such a large contraction in output that many of us are sort of going back to the history books to see if anything's comparable. It's outside of our general understanding, our experience, and it's a source of great concern. So the furlough scheme that was introduced was a very good idea and very successful. It costs around £14 billion a month and has meant that large numbers of people have been supported through what would otherwise have been terribly difficult personal circumstances. And,
of course.
And yet, if you make a statement about closing the furlough on a time-dependent basis, which means you will do it in October or November, you're not dealing with the fundamental cause of it, which is the impact of the virus and its effect on the economy. So I think I would have looked for us what we call, certainly in the area of monetary policy, a state-dependent commitment to say, look, we will continue to keep these supports in place until the economy recovers to something like where it was at the end of last year. Nearly all the large impact that we see is a result of the virus. We don't know how long it will go on for. We don't know, in a sense, when there will be a vaccine to improve overall circumstances in the country. And therefore the Chancellor's office needs to make a more obvious and long-term state-dependent commitment, rather than something which, as we all agree, the time itself is very hard to predict, and it's not something we should be pinned down to.
Yeah, exactly what I was gonna ask about, Professor, because so many have talked about these support measures being a bridge from the lockdowns, or I guess the intentional destruction of the economy to the recovery. And if you just end these furlough schemes at a certain date, October, November, before the recovery is there, it's the equivalent, someone said this morning, of building 3/4 of a bridge, which doesn't make much sense. Let me ask about something else, which is that the government, shut down the economy for some, but not for everyone. So, for example, the government refused the right of many merchants and service businesses to earn income, to earn revenue, but they still had to pay rent. The landlords and, bank loans were still collectible. Why is it you think that the government chose to pass the hot potato to merchants and service people instead of sharing it more broadly throughout the rest of the economy?
Orders submitted.
Well, I think in some industries there was the ability to have some delay in the payment of rents. But what was made available, arguably not to the extent it should have been, and proved in the early stages to be very difficult, were loans. Sense in which firms are going through, many of them, a temporary reduction in their revenue raising. And in that sense, if loans can be made available of the right amount and sufficiently quickly, and I'm not sure that happened immediately, firms should be able to see that through. There is one point, though, to the extent that there will be some permanent reorientation of the economy away from some of the things that we did in the past. So a little bit less hospitality, a little bit less travel, perhaps some more things that we might do in social care or indeed in agriculture. What we want to try and promote in a gradual and smooth sense is some reallocation of labour and resources to those areas. But of course, that's not something that we want to do or can do terribly quickly. Yeah.
Professor, just briefly, what level do you expect unemployment to get to, and how quickly, given what we heard from the Chancellor yesterday?
Unemployment, we expect to get to 10% this year. So whatever kind of schemes have got in place, firms will start shaking off employment very, very quickly, we think, in the autumn, particularly if demand doesn't return. And there are at least two reasons very quickly why demand will not return. Firms don't have a great deal of confidence in the future. They're not really sure where things are going, so they're going to defer investment. And households facing uncertain prospects for employment are likely to continue to save at high levels, and that will lead to a reduction in demand compared to where it would otherwise be, that will then mean firms will start to lay people off.
Professor, thank you very much. Thanks for your time this morning, Professor Jagdeep Chan, Director of the NIESR. Thank you very much for joining us to take us through some response to the Chancellor's statement yesterday. Up next, head in the clouds. Europe's biggest tech company shows signs that the pandemic-induced slowdown is starting to end. We'll get the latest on SAP. This is Playback.
Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order canceled. Order submitted. Order canceled.
Welcome back to Bloomberg Markets. This is the European Open. 40 past, so 20 minutes to go until the start of trading, and we do see futures that are pointing higher here in Europe. The largest tech company in this region is showing signs of recovery from the pandemic-induced slowdown. SAP reported preliminary results overnight that saw better than expected revenue for the quarter, buoyed by a resumption of software deals in Asia and cloud revenue. Joining us now for more is our editor, Dave McComb. So Dave, talk to me first about, given the pandemic, how has SAP managed to boost sales year on year?
Well, the story they're telling is that companies in Asia have focused on cutting their own costs and also on making a more transparent supply chain. And that all involves SAP products, using them to upgrade their access to their supply chain and their ability to adapt quickly to changing scenarios like we have now with COVID-19. Some of that involves, of course, order submitted. Order companies become more nimble and deal with unexpected situations quickly and efficiently. So that's helped them boost sales, especially in Asia, where economies are coming back online and companies are having to look at how they can restart production using different sets of factories and adjusting their supply chains to this crisis.
Order canceled.
Yeah, good morning to you, Dave. So any sign then that this comeback has momentum?
Well, it was the revenue figure was a surprise. The income figure was also a surprise. It looks like they've managed to hold on to their margins. They're still making money even amid this crisis by cutting costs. In some sense, they're eating their own cooking in that they've partly cut costs by having meetings online, basically using their own software and their own technology to allow them to sort of do deals remotely and
canceled.
Basically improve their own supply chain using their digital technologies. So that's been a good sign for going ahead. That there's going to be continued demand for their product, and that they do have the ability to cut their own costs even in a brutal environment such as we're facing now. Another thing is that they did maintain their outlook, which was pretty bright. They're looking for operating income, annual operating income on the high side of the range, 9.1 billion euros. That's pretty high, and it's above what analysts expect, actually. Analysts are calling for about 7.8. So they left that in place. So that's a sign that they're pretty optimistic about their own company's prospects.
Order submitted. Order submitted.
Dave, thanks very much.
Order submitted. Order submitted. Order canceled.
Minutes away from the market open. We'll keep an eye on SAP. Plenty of other stocks to keep an eye on as well, though. Danny Berger has a rundown. Danny.
And one of the other stocks to keep an eye on today is Airbus. They've released their order figures overnight, and they had another month of absolutely zero new aircraft sales. So this is the third month so far this year. They had no sales in May. They also had no sales in February. And this shows what a tough path Airbus has to follow for the rest of the year, as demand just isn't there. Now, this means that for the first half of 2020, their orders are about half the amount that they saw last year.
What about Rolls-Royce? And this is, of course, the engine-making engineering company, not the BMW car brand.
Right. I mean, look, much like any company that touches the travel industry, Rolls-Royce has had a difficult time, but we've had a rare spot of good news for Rolls-Royce coming out this morning, saying that their performance in the second half, they do expect it to improve. They've seen a lot of cash flow, really painful, but now they say their yearly cash outflow is going to be about £4 billion. They also are seeing liquidity improve as well. Liquidity going up to about £8 billion. And that includes a new 5-year term loan they've just secured. That's £2 billion, and they have yet to draw down on that.
Let me ask you about the mining sector then, Danny. Rio Tinto, what's the news flow?
Rio Tinto really in the middle of dealing with this aluminum supply glut that the market, the entire industry is dealing with because there's not a lot of demand. Well, Rio Tinto had been operating a loss-making aluminum plant in New Zealand. They've announced that they're going to close it. So that means about 1,000 jobs also getting the axe with this closure. They're also going to look at some of their other plants, including ones in Iceland and Australia, considering closing that one as well. Look, the industry is in a lot of pain right now. Really, the only place that a lot of these operators are turning a profit is in China, but otherwise, expect to see more closures should the supply glut continue. Matt, Anna?
Got it. Danny, thanks very much. Danny Berger there with some of the stocks you should watch. Could be a lot of action today. Coming up on the program, we're going to speak with the CEO of Siemens. Joe Kaeser joins us as he heads into an extraordinary general meeting to finalize details of the conglomerate's energy spin-off. Don't miss that interview next. This is Bloomberg.
Welcome back to the European Market Open. We still have 12 minutes to go until the start of the cash equities trading day. We will look to see what kind of handover we get through from the Asian session into Europe. Let's get a Bloomberg First Word News update. Here are the top stories we're covering this morning at Bloomberg. Global coronavirus cases have topped 12 million, with the US now accounting for more than a quarter of confirmed infections worldwide. Both California and Texas are reporting a surge in cases. Cleveland Fed President Loretta Mester says the renewed spread is adding to the pressure facing the economy. She says these numbers are troubling. In Israel, critics say Prime Minister Benjamin Netanyahu is consolidating power to undermine democracy. This week, Parliament approved an emergency law that curtailed its own powers. It allows the cabinet to take any decision deemed necessary to curb the spread of coronavirus. Netanyahu says these emergency measures are necessary. Italy says it will tap the euro area bailout fund if it needs to. Speaking to Bloomberg, Finance Minister Roberto Gualtieri left open the possibility. Some politicians have rejected using the funds. They say it would mean the country loses control of its own public finances. But Gualtieri says there's no stigma about using the ESM credit line. President Donald Trump has touted U.S. ties to Mexico, including on trade, immigration, and combating drug trafficking. That's as he met Mexican President Andrés Manuel López Obrador. Trump says the relationship between the two countries has never been closer. The meeting was to celebrate the finalization of the USMCA trade pact. The power vacuum at Commerce Bank is set to last a little longer. The supervisory board is extending its search for a new chairman and chief executive. That's after the previous bosses stepped down following a shareholder revolt. It prolongs the uncertainty for the lender as some investors call for a broader overhaul of the company. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Matt.
All right, now let's take a quick look at what's going on in markets right now as the Chinese rally continues into its 8th day. Here you can see the Shanghai Comp and the CSI 300 both up more than 1%. This is 8 days in a row, the longest stretch that we've seen in terms of gains for Chinese stocks since January of 2018, the very beginning, and that was a difficult end to that story. Let's get to a completely different story here in Germany. Siemens shareholders will vote on spinning off Siemens Energy today. The company plans to cede majority ownership of the unit in September. That will create a newly independent turbine and oil field equipment maker. We're joined by the CEO, Joe Kaeser. Joe, thanks very much for your time. Appreciate you taking a few minutes with us. Let me first ask you about the timing of this. Good morning. Let me ask you about the timing of this because the damage to the oil and gas industry has been pretty serious and sustained. Why this spin-off now? Do you expect a recovery in at least prices by September?
Order submitted.
Well, I mean, first of all, it's got nothing much to do with the oil and gas industry. The oil and gas part of the Siemens Energy is a very minor part of the total 30 billion, 90,000 people enterprise. The reason why we do the spin-off is that we believe that focusing our company is very relevant in unprecedented times of change and speed of change. We have done that very successfully 2 years ago with Siemens Healthineers. We brought them to the market at 28 billion market cap. Today they are at 43 billion market cap. So massive value creation through focus and re-rating. The similar matter we do now with splitting our Siemens AG company into the industrial software automation company, including infrastructure, as well as the Siemens Energy. So this is not about Siemens Energy to the market. This is also about de-risking the new Siemens AG, focus it on industrial automation, digital twin, software, infrastructure, and modern mobility. So this is also a two-pronged approach. Now coming to Siemens Energy, as I said, about a 30 billion euro company, 90,000 people, that's a restructuring story. There's a lot of overcapacity in the traditional energy generation market, including transmission. Of course, also oil and gas, which is a minor topic in our equation.
Okay, let me just ask you though about the timing of the spin-off. To pick up on Matt's question, is there no oil price, no very weak oil price that will stop you from doing this at the end of September?
Yeah, as I said, the oil price is not relevant to the equity story. The relevance of the equity story here is, first of all, it's a restructuring case. We need to right-size the fossil energy area. But the real equity story is about transferring the Siemens Energy from traditional fossil energy generation into renewable energy. As you know, we have a 67% stake on Siemens Gamesa renewable energy, one of the two largest renewable energy companies in the world. That's the future. And what we are doing to do now is to transform the traditional generation into renewable energy and using the grid piece, the connectivity, which becomes more and more relevant in a multi-generation environment as the transmission and smart grid field. So we're very confident about this move. We do not need capital markets, let's say, sentiment for that, because it's a spin-off. We'll be spinning off 55%. We deconsolidate the Siemens Energy from Siemens AG, de-risk it with that. So I believe the single biggest potential on that move, which we are hopefully going to be approved today, will be a potential re-rating of the new Siemens AG rather than the energy field going forward.
All right, Joe, unfortunately, that's all we have time for, but I appreciate you stopping by. Joe Kaeser, there, the CEO of Siemens, which is expected to vote on the spin-off for its gas and turbine business later on today. Coming up, it's the market open. Futures are pointing higher as the Chinese rally continues. This is Bloomberg.
Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submit. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order fell. Order submitted. Order canceled. Order canceled. Order submitted. Order canceled.
A minute to go until the start of cash equity trading. Good morning, everybody. It's Thursday morning. Here are your headlines. Global coronavirus cases top 12 million, with U.S. infections rising by a record. As Vice President Pence says schools should reopen, the Fed's Raphael Bostic warns about the hit to consumer sentiment. China's 8-day stock market frenzy pushes the Shanghai Composite to its highest level since 2018. That's after megacap tech took the Nasdaq to another record overnight. Plus, SAP's revenue begins to recover from the pandemic-fueled slowdown as Europe's largest tech company sees a bounce back in software deals in Asia. Matt.
All right, take a look at European futures here. Higher as we get to the start of cash trading, 1% on DAX futures, FTSE futures up about 0.5% right now. Let's take a look at the global macro movers screen as equity indexes start to trade. We've got here on your GMM screen, of course, equity futures, commodities, sovereign bonds, and Forex. But the equity indexes, the live cash trade is on the left-hand column, and you can see Spain's IBEX coming out of the gate up almost 0.5% there. The FTSE gaining about 0.2% at the very start of trade. So it looks like we're seeing some milder green arrows and some gray blocks there, meaning that there really isn't that much movement. The CAC Caron up in Paris about 0.5% there. You can see as well adding to the gains, but not really huge gains here. And it looks like the continental indexes are generally going to do a little bit better than the FTSE today as well, as you have France and Spain up 0.5%, London up about 0.25%. Anna?
Order submitted. Order submitted.
Yeah, so European equity markets then opening, as you say, up around 0.4% for the European stocks, the Stock 600. That's after Chancellor Angela Merkel has urged EU members to compromise on an ambitious recovery package. The German leader told lawmakers in Brussels a common spirit is needed to confront the biggest challenge in the bloc's history. Joining us now is Maya Bandari, Columbia Threadneedle multi-asset portfolio manager. Maya, great to speak to you. So the significance of the bailout funds in Europe, we're talking a lot about it. There's some resistance from the frugal four, but do you think the base case assumption in markets is that this bailout fund is passed and will be pushed through somehow by Germany and by France?
Good morning, Anna. Our view on Europe's ERF is that it is a big deal, and it has the potential of being a game changer. Maybe isn't too far from Draghi's whatever it takes circuit breaker about 8 years ago. It addresses the region's Achilles heel, really, by mutualizing debt and fiscally integrating. I think the symbolism of it is probably more important than the money, and notably so, as you just mentioned, given the support from Germany, but also France. We think it needs to be agreed by October. I think on balance it appears to be likely that it will be agreed by October. And I think all in, it's one of the factors that has led us in the last month or so to turn more constructive on the euro in particular. You know, it removes some of the structural risk premium attached to the currency, and could also support a cyclical play if it prompts a replay of 2013 to 2015, when of course the euro spreads and bank stocks were all essentially one trade as investor flows flooded into European assets. So the euro is one asset we think can really benefit from this
But I assume not banks, right? Because they've been hit so hard. We're starting to see the fallout already from those that have made big state-backed or participated in big state-backed loan programs. What's your thought on industry groups that right now are valuable and those that aren't?
You're certainly right on the equity side of things more broadly, and banks in particular. I mean, I think when in Europe we're at best neutral on equity markets, really seeking to participate in markets, but not have too much cyclical exposure. Now, our last move in just the past week has actually been to clip back our risk appetite back to neutral, effectively reversing our decision at the March low point to take greater risk in multi-asset portfolios, and keeping low cyclical exposure, I suppose, is part of that. I should say that in equities we have something of a barbell at Columbia Threadneedle in our allocation portfolios. So we have a preference for quality growth companies in the U.S. But we hold that in a barbell with Asian cyclicality. Asia sets apart from Europe and indeed the UK in terms of the sort of cyclical companies it gives us exposure to. Asia, of course, as I think you were discussing earlier on in the show, is also coming out of this virus relatively well and activities rebounding pretty powerfully.
I was going to ask you, where do you see signs, clues as to the pace at which you can recover from this pandemic in Asia, Maya? Is it the timely nature of the recovery that draws you to those Asia cyclical names?
Well, I think it's the timely nature of the recovery. I think it's the fact that Asia was struck first and was pretty quick to come out of it. I think it's also the policy stimulus side of things. Asian central banks, the Chinese central bank in particular, is really putting its foot on the pedal here. Credit stimulus is approaching the sort of numbers we had in the past, in 14, 15 and 08, 09, although not quite there yet. And so, Asia, I suppose, from a cyclical perspective, is the area that we favor the most.
Order canceled.
Aside from, the bigger picture in Asia or the euro currency, is there something that gets you really excited in markets right now, Maya? Is there an investment play that you're talking about when you head to the bar at night, assuming there were bars open where you are, or something that you wake up excited about doing?
Order canceled.
Well, I mean, I think the thing that's been on our minds, in my mind, the most in recent weeks has actually been our approach to risk, and probably the highest conviction view we have here is that taking some of that risk off the table is prudent here and now. Markets have come a long way since March, so expectations of reward, if you like, or asset returns are necessarily lower than they were back in March, and at the fringes, uncertainty is mounting from second waves of the virus to trade tensions, U.S. elections, and of course how labor markets emerge once various furlough and support schemes fade. Now, I should say, though, just to be clear, that this doesn't put us in defensive mode. I mean, we still remain quite exposed to both equity and credit risk that we continue to favor with an overall risk neutrality. And I suppose within asset classes, investment-grade credit is one that we continue to favor quite strongly. It is very much a direct beneficiary of some of these policy measures we've been talking about.
Order canceled.
And looks poised to do pretty well, we think.
Yeah, absolutely. And we could, there's a great story on the Bloomberg this morning about the fact that we could see really a second wave spike in IG issuance as well. Maya, we're going to keep you with us. Maya Bandari, Columbia Threadneedle, multi-asset portfolio manager, our guest this morning. Coming up, SAP shows it's on the right track to bounce back from the coronavirus slump. But aside from tech, should we expect a strong earnings season elsewhere? That's another topic we'll discuss. This is Bloomberg.
Order submitted. Order canceled. Order submitted. Order canceled. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order canceled. Order submitted. Order submitted.
Welcome back to the European Market Open. We're 10 minutes into a European trading day, which this Thursday actually looks quite positive, up by 0.6%. The London market underperforms, though the FTSE 100 is fairly flat, whilst we see some gains coming through in Germany in particular, up by more than 1%. Let's get to some of the big business corporate stories that we are covering here at Bloomberg this morning in a Bloomberg Business Flash. Airbus has failed to secure any aircraft orders for a third month, and the company suffered one cancellation. That brings its total net orders for the year to 298. The tally marks a worsening of the crisis for Airbus. It had previously managed to avoid losing business by agreeing to defer deliveries. The power vacuum at Commerzbank is set to last a little longer. The supervisory board is extending its search for a new chairman and chief executive. That's after the previous bosses stepping down following a shareholder revolt. It prolongs the uncertainty for the lender as some investors call for a broader overhaul of the company. Wirecard's troubles may be growing. According to Dow Jones, the US Justice Department is looking into whether the fintech company played a role in an alleged $100 million fraud. Two businessmen have already been charged. Dow Jones says they're accused of conspiring to trick US banks into approving credit card payments for marijuana products. That is your Bloomberg Business Flash. Matt?
All right, now Europe's largest tech company, not Wirecard, is showing signs of recovery from the pandemic-induced slowdown. SAP reported preliminary results overnight that saw better than expected revenue for the quarter, buoyed by a resumption of software deals in Asia and cloud revenue. Maya Bandari, Columbia Threadneedle multi-asset portfolio manager, is still with us. Maya, what do you expect from earnings? I mean, are tech companies going to do better than the rest as a result of the shutdown, as a result of the pandemic?
Well, I think for the earnings season more broadly, there are probably more markdowns to come. As companies sort of digest the various factors that we spoke about in your earlier segment, everything from second waves of the virus to trade tensions, elections, the condition of labor markets, and so on. At Columbia Threadneedle, we are more cautious on the street on 2020 earnings, and so we would expect some of those cuts to perhaps come through. But in terms of sectors, I think you're right. I think some sectors like tech, like cloud computing, we think could do quite well. I mean, we've already seen this in the results we had the previous quarter, but that the COVID crisis has in many ways accelerated some of the structural trends. For example, towards cloud computing, or indeed cashless payments. And so those are some of the sectors, as well as healthcare, that we think could come out better than other sectors in this earnings season.
So those are the ones to watch for on the positive side of things, Maya. What about areas of concern? We've been looking at the investment-grade credit market. Lots of people saying, well, the central banks are supporting that market, so there's nothing to worry about there. But in other parts of the corporate space, should we be looking to earnings season to tell us where debts are going to be affordable and where they're not?
Yes, absolutely. And I mean, I think you raise an important point, which is I think companies will come out of this crisis in broadly, or many companies will come out of this crisis in worse condition, and particularly some of those higher risk companies or deep value companies that tend to be those that may go out of business given the degree of contraction. Now, I suppose our central focus for economic activity to get back to where we were at the end of last year, only at the end of 2022. So a U-shaped recovery in current parlance rather than a V-shaped recovery. And so really maintaining a pretty strong preference for quality, we think is pretty important here.
What are you doing to hedge against the possibility of a second wave?
Well, I don't think we're doing anything specifically to hedge against a second wave, but as I reflected earlier last week at Columbia Threadneedle Asset Allocation, we clipped back our risk appetite, so took some risk off the table broadly, really reversing that decision we made in March to take greater risk in portfolios. And I think that's a function of two things. It's a function, of course, of valuations on the one side that are fuller, but also risks. And risks around a second wave are one of the key risks as we emerge out of this virus. So what we've done in multi-asset portfolios is effectively to clip back some of our risk exposures.
And where does that leave you on UK assets, finally, Maya? The pound, UK stocks, clearly there's the same pandemic risk that everybody else is dealing with, but then there's also other layers to the UK story at the moment, not least of which the trade relationship across the Channel.
Yes, quite. Well, perhaps unsurprisingly, given what we've spoken about thus far, our last move has been to actually clip back UK equity exposures in multi-asset portfolios. The UK equity market has many characteristics of value, perhaps deep value, and with the added risk around Brexit and indeed the ability to track and trace, we stay neutral at best. We're also cautious towards sterling, where the factors I just mentioned, Brexit, ability to track and trace, but also sizable twin deficits and the prospect of negative interest rates should weigh against the currency. So we're broadly cautiously positioned towards UK assets here.
Maya, thanks very much.
Maya,
thanks for your time this morning. Maya Bandari, Columbia Threadneedle multi-asset portfolio manager. Coming up, Matt's going to be talking to Lamborghini next. Lamborghini's new hybrid supercar hits the road. They're going to be discussing the latest release and the outlook for the auto market with the company's CEO, Stefano Domenicali. That conversation with Lamborghini is next.
Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled.
Welcome back to the European Open. We are 20 minutes into the trading day right now, and you can see that the FTSE is actually turned down. Very little changed, but the arrow's red, losing 3 points to 61.52. The DAX in Frankfurt and the CAC 40 in Paris remain up, although the DAX a much larger gain at 1%. The CAC 40 only up about 0.2%. Of 1%. Let's turn to the automobile industry and to super sports cars, specifically Lamborghini has unveiled a limited edition open-top hybrid roadster. The Sian combines the carmaker's flagship V12 engine with an electric motor incorporated in the gearbox. A limited series of 19 cars is being produced. They've all already been sold. Joining us now to discuss the future of offerings like this at the company's headquarters in Sant'Agata, Bologna, is Stefano Domenicali, the CEO of Lamborghini. Stefano, let me ask first about how your company has fared during this crisis. I know that production was shut down for a while, but you worked quickly to reopen it. What does it look like for Lamborghini?
Good morning, Matt. I would say that, as you already anticipated, we had to close our factory for 7 weeks, and now we are fully back operational, respecting all the procedure that has to be respected in order to fulfill the requirement of our regulators. But I have to say, despite this tragedy, the feeling here and the atmosphere here is really positive, because in the last months, basically, we have launched digitally, unfortunately, because we couldn't do anything physical, 2 models. The version of Huracan two-wheel drive, and the last one that you have already said everything, that is the Sian Roadster that is behind me. So I would say that despite the situation, we are here to spread energy with our brand all around the world, because this is our nature, this is our DNA. Therefore, we try to stay focused on our objectives that are for sure the same that we had before the crisis.
When are we going to see a fully electric? I mean, you've got that hybrid behind you, and Lord knows I love Lamborghini V12 naturally aspirated engine, but the trend obviously is going to electric. So when are we going to see a fully electric Lamborghini for sale in production?
Order submitted. Order submitted.
Well, I can tell you one thing, Matt, that you will be very happy, because the V12 will stay as a halo model for the future. It will not be alone in the future model of this specific car. We're going to have hybridization. But to see fully electric Lamborghini, I think that we need to wait a little bit, because we do believe that in our segment, we need to be according with what our customer wants. And so, the electrification trend is confirmed within the group strategy being hybrid, and this is what we're going to do very shortly in the next models, but fully electric is too early and too premature for us.
When are we going to see a new flagship V12 then? The Aventador is getting pretty long in the tooth. It's still an awe-inspiring car to drive, but it wouldn't hurt to get a new transmission in there. What's next in the line of
Order submitted. Order submitted. Order submitted. Order submitted. Order canceled.
As you said, Aventador represent a unique success. The first one was launched in 2011, and after almost 10 years, the car is selling solidly very, very well. We are getting ready with the new models, but before arriving to that, with a very and totally new car that will be a super beast, we're going to have some new ideas that we want to share very, very soon with our customers. We just had the dealer meetings through the web and digital connection, and we have just discussed that with them. They are very excited because the portfolio offer that we're going to have in the near future has been never so solid in our history. Therefore, it's a great moment for our brand. It's a great moment because the opportunity to drive our cars all around the world will be fantastic, keeping the atmosphere always alive and emotional, as a Lamborghini brand should have, together with our customers.
Order submitted.
Can I ask about your move inside the group? Volkswagen is going to shift Lamborghini to a Porsche-led premium car group. Then it'll be, I guess, Porsche producing sports cars and consumer vehicles, Lamborghini producing super sports cars and hyper sports cars, and then Ducati, I would hope, staying in the group as well. Are you planning to work more closely together, those three super sports brands?
Well, Matt, as you know, this is a question that I cannot answer. We have shareholders, and our commitment is to make sure that our business is run at the best ever level possible. Then the decision we're going to make, we will respect, and we are ready in any case to perform. As I said before, Lamborghini has never been so strong, and in this moment we have no fear of having a different or whatever future we're going to have in front of us, because the loyalty of our customers, the level of product that we are ready to launch is really very, very good.
Order canceled.
Just 20 seconds left, Stefano. Our car commentator, Hannah Elliott, wrote a story about a boat that you have built. I wonder if you're thinking about branching out, or are these projects just one-offs?
Order submitted.
Order canceled. Of the future portfolio, because these unique cars, submitted. As you know, it's 2.5 million
order canceled.
Is representing a unique and specific product with unique positioning,
order
as we
submitted.
Said. But we're going to have a future for Huracan family, a future for Aventador family, and a future for Urus family with other ideas coming up very soon. And so therefore, as I said, there's a great moment of vitality of our brand that we're going to keep even stronger for the next couple of years.
Got it. Stefano, thanks so much for joining us. Stefano Domenicali, the CEO of Lamborghini, coming to us out of Santa Gata.
Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. 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 Order canceled. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order cancelled. Order submitted. Order cancelled. Order submitted. Order cancelled. Order submitted. Order submitted. Order submitted. Order cancelled. Order submitted. Order cancelled.
Welcome back to the European Market Open this Thursday morning, 30 minutes into your Thursday trading day. Let's have a look at where we are on the equity market story. And actually, we've deteriorated a little bit in the first half hour of trade here for Europe. Futures suggested we'd be considerably higher. We are a little bit higher, though, across European equity markets. The German market doing very nicely, but London is flat, so the FTSE 100 is flat right now. The CAC 40 just 1/10 of a percent to the upside. If you delve into the GRR, into the sort of sector-specific breakdown, then you'll see a little bit of why Germany is ahead. We've got technology stocks moving to the upside, and part of that is a really heavy weighting coming from SAP. We had numbers from the tech player in Germany overnight, and those have gone down very nicely with the market. That stock is up by 7%. As a result, we see many others in the tech sector also trading to the upside. I should point out that US futures are looking flat to negative, so Nasdaq futures are flat. Other US futures looking negative.
Order submitted.
All right, let's get the Bloomberg first word news for you. These are today's top stories from the Bloomberg terminal. Australia is suspending its extradition agreement with Hong Kong. The move by Prime Minister Scott Morrison is set to further inflame tensions with China. It follows Canada's similar decision last week. Australia will also give skilled Hong Kong migrants 5-year visas with a pathway to permanent residency. China has since responded, urging Australia to change its stance and saying it reserves the right to take countermeasures.
Order submitted.
President Donald Trump has touted U.S. ties to Mexico, including on trade, immigration, and combating drug trafficking. That's as he met Mexican President Andrés Manuel López Obrador. Trump says the relationship between the two countries has never been closer. The meeting was to celebrate the finalization of the USMCA
Order submitted.
Joe Biden will call for a moderate approach when it comes to reviving the U.S. economy. Sources have told Bloomberg his plans would shelve some of the more ambitious proposals being pushed by progressives. The presidential nominee plans to deliver the detail in an economic speech today. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in 120 countries.
Order submitted.
Now, Rishi Sunak is trying to save the summer. The UK Chancellor has unveiled £30 billion of tax cuts and extra spending to support the country through the next stage of the pandemic. Chief Secretary to the Treasury, Stephen Barclay, told Bloomberg the plan was about avoiding economic scarring.
Order submitted.
Ultimately, it's about protecting jobs, supporting those who lose their jobs, getting the skills and the coaching to get them back into work, and creating jobs by bringing forward, accelerating a number of our infrastructure programs, getting confidence into particular parts of the economy. So we protect the jobs, we support the jobs, but we also create jobs. That's the best way of avoiding the economic scarring as a result of this health pandemic.
Order.
Joining us now is David Goodman, our UK economy reporter. David, it was as if the Chancellor yesterday wanted to preempt the criticism that he knew he'd face around ending the furlough scheme or setting a timetable for it. He said, you know, wherever I end it, people will say I should have done it later. What we were hearing from the NIESR was that maybe it should have been more state-dependent, so situation-dependent end to the furlough. What are the kind of criticisms that we're hearing then of what the Chancellor had to say?
Order cancelled.
Yeah, that's that's certainly a big one. The other one that we're hearing from the likes of the BCC and others is just on kind of what happens if there are local lockdowns, and we've seen one in Leicester already, and obviously that has a huge impact on firms and businesses in the area. So at the moment, there isn't really a specific plan on what happens to them in terms of furlough, particularly if it happens towards the end of the scheme or once it's finished. And then generally, there's been some more criticism that this is really the job really won't be done.
Order submitted. Order submitted.
And then risk is kind of really big.
Order submitted.
Sunak has been working pretty hard to avoid
order cancelled. Order
I wonder about the tax reduction, stamp duty is going to be reduced. How is this going to affect, David, the housing market there? Is this going to help or hurt, for example, first-time buyers?
Order submitted. Order submitted. Order cancelled.
Both in the housing market and in the kind of associated areas of like construction, painting and decorating, all this stuff would benefit from new homeowners having more money, obviously. I suppose the flip side, which you're kind of alluding to there, is that the worry is for first-time buyers that this just pushes up the cost of housing, really. And until now, first-time buyers, particularly those buying under £500,000, have some benefit from particular stamp duty relief that they get. So now everyone's on a little playing field when it comes to stamp duty. So yeah, I can see why there might be some concerns there. I suppose you have to look at this in the context of what may be falling house prices anyway. We saw a report earlier this week saying they were falling for the first time in 8 years on an annual basis. So, I mean, obviously the market's been through quite a difficult time of it since the lockdown started. So I think some of these things may balance out slightly.
It was interesting to see, David, that there wasn't very much that was sector-specific about the bailouts. Sure, there was for retail. There was the VAT measures for hospitality and retail. So I take that back. There were some sector-specific measures, but some sectors that had been asking for some special treatment didn't get them, like aviation, for example. Do we get the sense that that's just the UK just doesn't want to go that direction? Or maybe there are things that, and also national insurance, tweaking, things that have been left for the autumn, other levers that could be pulled?
Yeah, I think the autumn is certainly kind of a summer we may see more measures. I think it strikes, what kind of struck us yesterday was that Sunak was really looking at those areas of the economy that have been hit quite a lot by the lockdown and were kind of easy to spur demand in the short term. You mentioned housing and hospitality. Obviously, if you cut VAT, that's a kind of a boost for that area. In terms of the likes of aviation, I mean, Sunak just been doing the media round this morning, and he was talking about the other schemes that are open to them. Obviously, there's the various loan programs, and then there's money available from the Bank of England as well. So there are some measures in place for that, and I think the issue right now is just working out where you can target that money as effectively as possible, and Sunak really has to tread that line between targeted spending that helps particular areas and excludes others, or just a kind of general broad-based stimulus package that can help everyone.
David, thanks so much for joining us, our UK economy reporter, David Goodman there. We're going to be speaking to Sunak's counterpart from the Labour Party, the shadow chancellor, Annalise Dodds, just after 9 a.m. London time. Now, global drug makers are racing to develop a treatment for COVID-19. Merck CEO Ken Frazier says his firm expects to start human testing on 2 vaccines by the end of the year, but he says he won't rush vaccine development at the expense of safety. He spoke with Carlyle co-founder David Rubenstein on Leadership Live.
We expect to go into human testing with our vaccines, both of them by the end of the year. What I can tell you is that the fastest vaccine ever developed was our mumps vaccine, and that took 4 years. So now we know that the urgency of the situation is going to cause us to try to move quickly, but never, ever at the expense of safety.
So human trials, you mean phase 1, phase 2, phase 3? What phase are you in now?
Well, that's part of the way that I think people are thinking about speeding up the whole vaccine development. So for us, we're thinking about going into human trials. Often you can call those phase 1/phase 2 trials if they're designed in the right way. The FDA came out recently with some very thoughtful guidance. And what they've said, among other things, is that they wouldn't even approve a vaccine for emergency use unless there was 6 months of observation of data. So that gives you a sense that the fastest it could be is, let's say, a year from now.
Well, some companies that are getting money from the federal government under the Operation Warp Speed program are actually manufacturing the vaccine already on the hope that they get approved. Are you manufacturing the vaccine that you're developing, or you're not manufacturing it yet?
No, we're scaling up to be able to make hundreds of millions of doses of both vaccines. So that's another example of what I mean about trying to compress the time period without sacrificing safety in any way. So we're going to be prepared if the data bears out that one or both of these vaccines are useful from a safety, efficacy, from a risk-benefit standpoint. We're going to be ready to come forward with hundreds of millions of doses in fairly short order.
So if phase 3 is going to be postponed a bit, maybe that's going to happen in other states, and we now see in Florida and Texas and other places there's a lot of the virus catching on, are you worried that the U.S. economy will not come back anytime soon and we're going to be in this recession for quite some time?
I am worried. The vast majority of Americans, David, work for small businesses. They don't work for companies like Merck. And I worry a little bit about how resilient those small businesses can be, those restaurants, when they've now been told that they have to be closed for longer. So I am worried about the economy, but at the end of the day, with whether you're a small, medium, or large business, the best customers are the ones that are healthy. And if we don't have healthy customers, the economy can't come back anyway. So job number one is to protect the American people and to keep the virus as low as it possibly can be so that it doesn't overwhelm our medical system. And that really comes down to whether or not we as Americans are willing to take the advice we've been given about wearing masks, social distancing,
order submitted.
Pay attention to our hygiene, etc.
So in the Fortune 500, there are 4 CEOs who are African American. You're one of 4. Are you surprised that in this day and age there's so few? And why do you think there are so few who are becoming CEOs or are CEOs of the Fortune 500 companies?
I would say that if you had gone back 25 years, the most pessimistic observer would have thought we would have had more than 4 out of 500. So I can't say that's something that doesn't surprise me on one level. On the other level, I think we have to be honest in this country. I think we have to recognize that there's subtleties to our history around race, that people who are African American, for the most part, find themselves in a situation where they have to overcome some customs, some beliefs, and it's much harder for many African Americans to find their way to these positions. I just mentioned that Dr. Vagelos brought me out of a law firm and put me here. I think one of his reasons, frankly, because he said this publicly and in a book, is he wanted to have a diverse management team. And so I was brought in part for that reason, but I was also given an opportunity to stretch assignments. And so I don't think my experience is typical for African Americans in corporate America.
Order canceled.
Really interesting conversation there with the Merck CEO, Ken Frazier, speaking to Carlyle co-founder David Rubenstein on Leadership Live. Up next, Chancellor Angela Merkel urges the EU to rise to the biggest challenge in its history and agree on a recovery plan. We discuss next. This is Bloomberg.
Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submit. Order canceled. Order submitted. Order submitted. Order canceled.
Welcome back to Bloomberg Markets. This is the European Open. We are 45 minutes into the trading day and looking at some mixed picture, really. Germany showing some big gains here.
Canceled.
Decent gains, more than 100 points to 12,600. The FTSE and the CAC 40 are down
canceled.
or unchanged. Let's get to the bigger picture. Chancellor Angela Merkel urged the EU to rise to the biggest challenge in its history and come to an agreement on a recovery plan. Merkel spoke to European Parliament yesterday, calling for a compromise from all sides as Germany takes on the EU presidency. Merkel has been blunt about the scope of Europe's economic fallout, even as the EU wrestles with geopolitical tensions between an emerging Chinese superpower and a U.S. that's retrenching under President Donald Trump. To talk about the EU presidency and Europe's relationship with the U.S., we're joined by Suda David Wilp, German Marshall Fund Senior Transatlantic Fellow. Suda, thanks for coming back to the program. Let me ask first what you think Merkel's goal is here as she takes over the EU presidency.
Hi, Matt. Yes, Angela Merkel.
Order submitted. Order submitted.
Not just herself, but also the country. And I think,
order canceled.
She had the foresight to say that, Europe may have to take its fate into its own hands. It can't depend on others. And she didn't say so directly, but I think she meant under her breath the United States. And Germany and Europe finds itself increasingly wedged between these two great powers, the United States and China.
Order
canceled. And the
canceled.
question is whether Europe will be united enough to sort of chart its own destiny.
Suda, good morning. Angela Merkel saying yesterday as well that she's fighting for multilateralism. Does she have friends in that fight?
Well, I mean, it's a little
canceled.
bit ironic because although
canceled.
Germany sees the EU as one of its main foreign policy pillars, without the EU, Germany wouldn't be what it is today. It
submitted.
Let's just say,
canceled.
hasn't been the best partner to create solidarity. There are a number of issues that Germany itself has not done very well in, whether it be reaching its climate change goals, how it dealt with migration,
order submitted. Order submitted.
And asking for mandatory quotas, which countries like Hungary and Poland were not happy about. And of course, like Nord Stream 2, this project with
trying to bring Russian gas into Europe. That does not
canceled.
really, cause much, or has not helped create strong partners within Eastern Europe.
Order submitted. Order submitted.
Merkel stand up to Putin, right? It's pretty hard to stand up to a leader who is annexing other sovereign nations when you're also doing your best to try and help him sell billions of dollars of his products to other countries.
Yeah, I mean, I think Germany always wants to sort of take that middle road, and now it finds itself where it does have to eventually choose sides. I mean, it might have worked in the past, but Donald Trump, you can fault him for his tone and his perhaps disrespect for multilateral organizations. But he does make a point about why is there NATO? Why are we putting money into this organization when Germany is sort of helping Putin and his regime with Nord Stream 2? That definitely is a good point. But, I think Merkel also, you have to give her credit. She has been a strong, advocate for sanctions with Russia. She did not necessarily wobble while other countries in Europe, like Italy, may have wobbled, or even France. So we do have to give her credit where it's due.
Order canceled.
Is it possible that Europe can find some better, more common ground with the US on Nord Stream 2, on energy needs, if Europe promises to buy a bit more US energy, and then would some of the tension over Nord Stream 2 go away?
Order submitted.
I think we've sort of passed a point now where
canceled.
It's also a bipartisan outlook in the United States about this project. I mean, Congress is looking to slap more sanctions, and I don't necessarily think that buying U.S. LNG
canceled.
would help improve the situation. I think this is definitely going to be a sticking point in the transatlantic relationship with a Trump 2 presidency or even a Joe Biden administration.
Order submitted.
Suda, thanks very much. Thanks for joining us. Suda David Wilk, a German Marshall Fund fellow, senior transatlantic fellow, giving us her insights into that transatlantic relationship. Coming up, do U.S. assets need more fiscal stimulus? We will put that question to Bloomberg's Markets Live currency and rate strategist, Ven Ram. That's next. This is Bloomberg.
Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order canceled. Order submitted. Order submitted. Order
Welcome
canceled.
back to Bloomberg Markets. This is the European Open. We are 54 minutes into the session, and we're seeing little change in Paris. The FTSE down just slightly, about 10 points.
Canceled.
But the DAX gaining more than 100,
Order
114
submitted.
now in Frankfurt. Let's
submitted.
get to the markets right now with
submitted.
Bloomberg's MLive currency and rate
canceled.
strategist, Ven Ram. And Ven, you have been looking at which countries or which markets in the developed world offer the highest bond returns after hedging out currency risk. I'm sure this is something a lot of investors would love to know about. What have you found?
Morning, Matt. So it's a very interesting study. Portfolio managers in the U.S. can earn materially higher returns than from holding treasuries by buying bonds in
canceled.
Italy, Spain, and Portugal, the peripheral euro area economies. Of course, bonds of these peripheral economies are nowhere in the same league as treasuries in terms of asset quality, etc. But you can't. But the reality of the matter is that you can't lock in a return of 1% even anywhere in the U.S. unless you buy 30-year notes. Order submitted. The risks are low given the fiscal backstop from the European Union and the monetary backstop from the ECB's bond purchases. At the other end of the spectrum, from a sheer returns perspective, German Bunds and UK gilts are the worst to hold for dollar-domiciled investors because they offer much, much lower returns than nominal treasuries.
Submitted. Order submitted.
Let me ask you about that fiscal backstop, whether we need to see more of it in the United States. I know on the Markets Live team you've been asking this question today. Do U.S. assets need more fiscal stimulus? What kind of responses have you had?
Order canceled.
Well, I mean, I think what I would say is that U.S. assets don't need as much fiscal stimulus, but I would certainly say the economy needs it.
Order submitted.
Policymakers must use the opportunity this crisis presents to boost infrastructure spending, but I doubt that the much talked about $1 trillion infrastructure spending plan will come to fruition anytime soon, given that the impending elections mean that there will be little time for Congress to pass any such bill, even if one is prepared by the administration anytime soon.
Submitted.
As for assets, Anna, as you know, stocks have order submitted. Fiscal stimulus.
Order submitted.
Anna, Matt.
Ven, thanks so much for joining us. Looking forward to see your piece come out on the MLive blog. You can type MLIV go if you're a Bloomberg subscriber to get the work that Ven does, as well as the rest of the team. I see Richard Jones has a great piece out right now on the BOE sealing the static summer that was in England. This is Bloomberg.
Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled.
Global coronavirus cases top 12 million, with U.S. infections rising by a record. The Fed's Raphael Bostic warns about the hit to consumer sentiment, while the Trump administration pushes for schools to fully reopen. Tech on a tear. China's 8-day stock market frenzy pushes the Shanghai Composite to its highest level since 2018. The Nasdaq hits another record overnight. And Sunak tries to save the summer. The UK Chancellor unveils his £30 billion stimulus package. We will get the reaction from the Labour Party. His Labour counterpart, Annalise Dodds, joins us shortly. A warm welcome to Surveillance, everybody. I'm Anna Edwards, live in London, standing in for Francine in the early part of this programme, at least. Let's check in on the markets then, what we've got for you on these markets. We've got the Stock 600 moving to the upside, up by 0.3%. The London market is the real laggard today, so London's fairly flat. The Xetra DAX in Germany going well, though, up by 1.1%, and SAP's numbers, certainly a big weight in the DAX and a big help in those efforts. We do see a little bit of stalling in the risk-on move, though. We see some of the oil price moves coming to the downside, so NYMEX at 40.63, down by 0.7%. US 10-year yield currently yielding 0.64%, and the euro also worth checking in on that, since we had Angela Merkel in Brussels this week calling for a huge amount of cooperation needed to save Europe from its current challenges. 113.34 is where we trade on euro dollar. Let's get a Bloomberg First Word News update. For that, we go to Leanne Gerrans. Good morning, Leanne.
Good morning, Anna, and thank you. Global coronavirus cases have exceeded 12 million, with the US now accounting for more than a quarter of confirmed infections worldwide. Both California and Texas are reporting a surge in cases. Cleveland Fed President Loretta Mester says the renewed spread is adding to pressure facing the economy. She says these numbers are troubling. Australia is suspending its extradition agreement with Hong Kong. The move by Prime Minister Scott Morrison is set to further inflame tensions with China. It follows Canada's similar decision last week. Australia will also give skilled Hong Kong migrants 5-year visas with a pathway to permanent residence. Morrison says the new Chinese security law represents a fundamental change. And in Israel, critics say Prime Minister Benjamin Netanyahu is consolidating power to undermine a democracy. This week, Parliament approved an emergency law that curtailed its own powers. It allows the cabinet to take any decision deemed necessary to curb the spread of coronavirus. Netanyahu says these emergency measures are indeed necessary. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Now, the global travel industry has been left reeling from the coronavirus pandemic. Expedia is competing for consumers in a shrunken market, and with less money for advertising, has to be particularly strategic. The IAC and Expedia Group Chairman Barry Diller told us why he's not planning to join the Facebook boycott.
Yeah, I'm not so sure I believe in breakup as an effective, as being effective. But I've been saying for many years now that regulation must come as these businesses grow ever larger, and I'm particularly thinking in this case about Google, but the others as well, as they become. Google is the only actual monopoly. The others have varying levels of competition, but they're absolutely, when you have monopoly power, you have to have regulation. And I think in the next couple of years, we'll probably get closer to it than we've ever been. I think that's healthy.
A growing number of companies are boycotting ad spending on Facebook over that company's policies on hate speech. Is that the right thing to do? Are you doing the same thing?
No. No, we're not. Look, we're not going to obviously support what we think is hate speech, and we're pretty careful about that. I've been I'm very much a supporter of Mark Zuckerberg. I think he's obviously brilliant, but also I think he's completely decent. I thought that his policy of saying, I'm not going to regulate essentially political advertising was wise, because I think it's almost impossible to try and regulate what people say politically, either for or against something. And I'm speaking of the candidates themselves and the apparatus around them and all of that. I just think that's sliding into a bad business. So, however, when there is identified hate speech, and I think they are addressing it, of course you're going to try and not promulgate that using the tools that you can use. I don't believe in boboycotts. I think a quote boycott against Facebook is ill-advised.
Order submitted. Order canceled.
And you know, I'm hopeful. Submitted. I think that Facebook is addressing
order canceled.
The extreme forms of speech. Order
submitted. Order submitted.
Any group of people, more than two, which is you're going to have opinion. When people have can have voice to their opinion and are amplified by our internet communications miasma throughout the world, you're going to get a lot. I mean, go on Slack or go on any channel of your own colleagues, give them anonymous voice.
Canceled.
They're going to say terrible things about you. Not all of them, but some of them will. Get used to it.
That was Barry Diller, IAC and Expedia Group Chairman,
order submitted.
Now stay with surveillance. Plenty coming up on the programme, including our conversation with the UK Shadow Chancellor, Annalise.
Order submitted. Order canceled. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order filled. Order submitted. Order filled. Order submitted. Order canceled. Order filled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Anna Edwards here in London. Welcome to the programme. Let's get a Bloomberg Business Flash. For that, let's go to Leanne Gerrans.
Order submitted.
Thank you, Anna. SAP's revenue is beginning to recover from the pandemic-fueled slowdown. Europe's biggest technology company has been buoyed by software deals in Asia and cloud computing. Sales grew 2% in the quarter, but the company's cloud revenue climbed 21% to about €2 billion. Airbus has failed to secure any aircraft orders for a third month, and the company suffered one cancellation. That brings its total net orders for the year to 298. The tally marks a worsening of the crisis for Airbus. It had previously managed to avoid losing business by agreeing to defer deliveries. The power vacuum at Commerzbank is set to last a little longer. The supervisory board is extending its search for a new chairman and chief executive. That's after the previous bosses stepped down following a shareholder revolt. It prolongs the uncertainty for the lender as some investors call for a broad overhaul of the company. And that's your Bloomberg Business Flash. Anna.
Leanne, thanks very much. Leanne Gerrans. Now, Siemens shareholders will vote on spinning off Siemens Energy today. The company plans to cede majority ownership of the unit in late September. That will create a newly independent turbine and oil field equipment maker. We spoke to the CEO, Joe Kaiser, earlier.
Order submitted.
Order focusing our company is very relevant in unprecedented times of change and speed of change. We have done that very successfully 2 years ago with Siemens Healthineers. We brought them to the market at 28 billion market cap. Today they are at 43 billion market cap. So massive value creation through focus and re-rating. The similar matter we do now with splitting our Siemens AG company into the industrial software automation company, including infrastructure, as well as the Siemens Energy. So this is not about Siemens Energy to the market. This is also about de-risking the new Siemens AG, focus it on industrial automation, digital twin, software, infrastructure, and modern mobility. So this is also, a two-pronged approach. Now coming to Siemens Energy, as I said, about a 30 billion euro company, 90,000 people, that's a restructuring story. There's a lot of overcapacity in the traditional energy generation market, including transmission. Of course, also oil and gas, which is a minor topic in our equation.
Is there no oil price, no very weak oil price that will stop you from doing this at the end of September?
Yeah, as I said, the oil price really is not relevant to the equity story. The relevance of the equity story here is, first of all, it's a restructuring case. We need to right-size the fossil energy area. But the real equity story is about transferring the Siemens Energy from traditional fossil energy generation into renewable energy. As you know, we have a 67% stake on the Siemens Gamesa renewable energy, one of the two largest renewable energy companies in the world. That's the future. And what we are doing to do now is to transform the traditional generation into renewable energy and using the grid piece, the connectivity, which becomes more and more relevant in a multi-generation environment as the transmission and smart grid field. So we're very confident about this move. We do not need capital markets sentiment for that because it's a spin-off. We'll be spinning off 55%. We deconsolidate the Siemens Energy from Siemens AG. So I believe the single biggest potential on that move, which we are hopefully going to be approved today, will be a potential re-rating of the new Siemens AG rather than the energy field going
submitted.
forward.
Order submitted.
That was Joe Kaeser, the CEO of Siemens. We'll watch how the vote goes at the EGM later on today. Coming up on the programme, after Rishi Sunak's £30 billion package of measures to restart the UK economy, we'll ask the opposition Labour Party what they would be doing differently. Our interview with Annalise Dodds, Shadow Chancellor of the Exchequer, is next.
Order submitted. Order cancelled. Order submitted. Order cancelled. Order submitted. Order cancelled. Order submitted. Order submitted. Order cancelled. Order submitted. Order submitted. Order cancelled. Order submitted. Order cancelled. Order cancelled. Order submitted. Order submitted. Order submitted. Order cancelled. Order submitted. Order submitted. Order cancelled. Order submitted. Order submitted. Order submitted. Order failed. Order submitted. Order submitted. Order failed. Order submitted. Order submitted. Order submitted. Order submitted. Order failed. Order failed. Order failed. Order cancelled. Order submitted. Order submitted. Order submitted. Order cancelled.
economics, finance, politics. This is Bloomberg Surveillance. I'm Anna Edwards here in London. Let's focus on the UK's economic response to the coronavirus. In a 30-minute speech, Chancellor Rishi Sunak outlined a £30 billion package of tax cuts and spending increases aimed at reviving confidence among consumers. The measures threw money at home buyers, the hospitality industry, and employers who retain staff.
In just 2 months, our economy contracted by 25%. The same amount it grew in the previous 18 years. Property transactions fell by 50% in May. House prices have fallen for the first time in 8 years. And uncertainty abounds in the market. We need people feeling confident to buy, sell, renovate, move and improve. That will drive growth. That will create jobs. So, to catalyse the housing market and boost confidence, I have decided today to cut stamp duty. This moment is unique. We need to be creative. So I've decided for the next 6 months to cut VAT on food, accommodation and attractions. I want every person in this house and in the country to know that I will never accept unemployment as an unavoidable outcome. We haven't done everything we have so far. Just to step back now and say job done. In truth, the job has only just begun.
Chancellor Rishi Sunak there. We're now joined by Annalise Dodds, the UK Shadow Chancellor from the Labour Party. Annalise, great to speak to you. Is it difficult to know what to criticise here when you asked for a statement that was all around jobs, 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 and at a rate of £1 billion a minute, Rishi Sunak really focused on jobs?
Submitted. Order submitted.
Labour were proposed by the Chancellor yesterday. In particular, we've said repeatedly that there needs to be a scheme for... Oh, sorry, I think we had some internet issues there. I hope they're resolved now. Yes, so I was just saying that we have called repeatedly for the Chancellor to look at a scheme to support young unemployed people. We've had schemes that have worked before in the UK, for example, the Future Jobs Fund under Labour government, schemes run by the Welsh Labour government. Seems like the government has now finally listened to those calls. We will have a so-called Kickstarter scheme. Now, we need to make sure that scheme involves genuinely new opportunities for young people, that it's not just pushing other workers out, that it's genuinely additional. But to the extent that it's put into place, of course, we support that. But, you know, there was one big problem with what the Chancellor announced. He's sticking to his one-size-fits-all approach to sectoral issues that just are is not sensible. You know, we're seeing our job retention scheme and our self-employed support schemes being removed at the same rate across the whole economy. But this is a sectorally based crisis, so he does need to shift from that approach.
Order cancelled.
Which sectors would you support then, Annalise, if you were in his shoes? Would you do more for aviation, for example?
Well, when it comes to aviation, we've said to the Chancellor and indeed to the Transport Secretary that they need to have a strategy. What's happening now is different airlines competing against each other, often using government support actually effectively to facilitate restructuring that they were previously committed to. So, you know, taking people off the furlough scheme, re-employing them under different works terms and conditions, a hemorrhage of jobs going on. Now, we accept that there will be change in aviation in the UK. There has to be change because of the climate crisis. There also is likely to be a structural reduction in demand for air transport because of more home working, etc. Nonetheless, that change when it comes should be change that's part of a plan. So we've asked the Chancellor repeatedly, look, sit down with the industry, sit down with trade unions, work out a plan for restructuring of this industry rather than this really destructive hemorrhage of jobs that's occurring in different firms. And then, you know, there's other parts of the UK economy that are still not even allowed to open. If we're thinking about our beauticians, for example, our gyms, and so forth. Now, they do need to have continued protection through this crisis. If they don't have it, the inevitable result will be unemployment. It's about targeting those funds. in the first place. And the Chancellor, we feel, has not been doing that sufficiently.
We will perhaps hear more about how the Chancellor plans to pay for all of this in the autumn. How would the Labour Party pay for all of this? Would you move more towards a wealth tax?
Well, of course, the most important thing that the Chancellor and his government need to do is to ensure growth. We're currently in a low interest rate environment. Now, accept that may not continue forever. But for as long as we are, we really, really need to focus, and it would be an imperative anyway, to ensure that we have that growth coming through. Now, in the UK context, this is not just about the economic measures. We have big challenges around building up confidence because, for example, our test track and isolate system is not yet working to the extent that it is in many other countries. You know, Labour as a constructive opposition have repeatedly set out ways in which that system can be improved. It really needs to be improved so that we get people confident enough to be going out and consuming. You know, it's all very well giving them incentives to do so, but if people don't have that confidence in the first place, that's a big problem. So that's what government has got to focus on now. Those suggestions that they might be introducing tax rises across the whole population, you know, and income tax, VAT, or national insurance across the whole population in the autumn, when we may still have very weak demand, you know, that does concern me, because that could knock down some of the growth in demand that we so desperately need to be growing our economy and ultimately eroding the debt. Or at least the interest that would be, the accrual of the interest that would be paid on the debt.
Submitted.
We were called upon by the Chancellor yesterday to eat out to help out. Will you be doing that in August?
So I have been doing so since we've had the ability to go back into catering outlets, and you know, I know how hard it's been for so many, particularly small businesses, but you know, for people working in the hospitality sector in general, it's been a really, really tough period. Of course, they're still in many cases not able to operate cost effectively because of the continued requirements around social distancing. So I would say again, you know, incentives can be a positive way of driving up demand, but really what's needed is in the UK having a much stronger handle on where the disease is. That means test, track and isolate getting sorted out.
Order filled.
Annalise, thanks very much. Thanks for joining us today. Annalise Dodds, UK Shadow Chancellor, giving her response to the UK Chancellor yesterday. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Anna Edwards, live in London. Let's get a Bloomberg First Word News update. For that, we go to Leanne Gerrans. Good morning, Leanne.
Good morning, Anna, and thank you. Yesterday, UK Chancellor Rishi Sunak announced £30 billion of tax cuts and extra spending to support the UK economy. He's raising the threshold for stamp duty, cutting taxes for the hospitality industry. He's even offered vouchers to cut the cost of eating out in August. Well, the aim to boost consumer confidence and protect jobs. President Donald Trump has praised U.S. ties to Mexico, including on trade, immigration and combating drug trafficking. That's as he met Mexican President Andrés Manuel López Obrador. Trump says the relationship between the two countries has never been closer. The meeting was to celebrate the finalization of the USMCA trade pact. And Joe Biden will call for a moderate approach when it comes to reviving the U.S. economy. Sources have told Bloomberg his plans would shelve some of the more ambitious proposals being pushed by progressive Democrats. The presidential nominee plans to deliver the detail in an economic speech, which is happening later today. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Let's stay with the UK for the moment. As the government outlines another package of measures to boost the economy, the Resolution Foundation says borrowing is on course to hit £350 billion this year. Let's get some perspective from the gilt markets then now, and a broader conversation about interest rate policy. Let's get to John Raith, head of UK and European rate strategy at UBS. John, your initial reaction then to what we heard from the Chancellor Rishi Sunak yesterday, some of the criticism coming from opposition parties and think tanks around whether there should have been something more sector specific or whether the furlough scheme should have lasted for longer. What's your initial response?
Morning, Anna. Yeah, I mean, I think, it's clearly some fairly innovative announcements among the Chancellor's comments yesterday. I think from the market point of view, we look at the sort of big numbers. How much is this all going to cost? And how likely is it essentially that the spending or some of the spending pays for itself in the longer term? In other words, by trying to protect more jobs through the furlough bonus scheme, for example, does that mean that unemployment doesn't suffer quite as much, and therefore the tax receipts and spending consequences in the longer term for the government are much smaller than the initial outlay? And really, time will tell whether that happens or not. So from the market point of view, I think this was certainly an interesting event, but as you can see from price action, not of major consequence, at least not initially.
Yeah, interesting, isn't it, that he pledges £1 billion a minute in a 30-minute speech, and it doesn't move the markets all that much. Do we have much of an idea about how all of this is going to be paid for? He's talking about interest rates. He's referenced low interest rates today.
Yeah.
What is your assessment? What are your assumptions about how we pay for all of this?
Well, I mean, that's really that goes to the heart of this, Anna. I think in the short term, with strong safe haven demand from investors for the safest assets, in other words, government bonds, and with the fact that QE purchases are ongoing, there isn't really a likelihood that yields are going to move sharply higher because of all of this extra borrowing in the UK or anywhere else. Longer term, as I say, it does depend on whether the economy picks up or the extent to which these schemes help the economy pick up. If it is significant, then effectively in the long term they really could pay for themselves. But if it's just spending money which doesn't ultimately help the economy in a significant way, it's going to mean a great deal more borrowing for a very long time to come. And in due course, if and when the economy recovers and coronavirus is no longer actively with us, it does point to significantly higher yields because the government is going to be borrowing unprecedented amounts of money for a long period of time. And all else equal, that will require investors will require a higher return on their investments.
Order canceled.
But what about negative interest rate policy, I suppose? Where does that come into the equation? What you've just said there about yields looking as if they would edge higher into the future.
Order submitted.
Well, I think the story is very different for the front end, and certainly over the coming months, if some of the downside scenarios that are clearly still out there around the pandemic, potentially around the Brexit situation later this year and so on, if they crystallise, the MPC may feel it has to take rates negative, even though it has some pretty serious potential negative consequences as well. But they may feel they need to do that. So for the foreseeable future, I think the front end is going to see very low rates, very low yields, based on very low policy rate expectations. But the further you move down the yield curve, the less current and near-term policy matters, and the more it is about the supply and demand equilibrium for government debt issuance. And, when you look at sort of 10, 15, 30-year yields, where bank rate is today or tomorrow isn't particularly relevant, other than as a sort of anchor at the very front end. It is more about how much does the government have to pay in interest to be able to sell the amount of debt it needs to sell. And as I say, when things return to normal, if they're selling multiple amounts of gilts compared to what they were in years gone by, then logic would suggest they need to offer more of a yield to get investors to buy that debt.
Order canceled.
And when we talk about policy around the world, we talk increasingly about yield curve control in Japan and Australia, and maybe less about negative interest rates. Is that something that's in the UK conversation as well?
Yeah, I mean, it's certainly there in the background, yield curve control. I think at the moment, we've got pretty active QE still going on. And I think the assumption is if the Bank of England needs to do more in the coming months, they're likely to carry on with QE in its current form. But at some stage, they may conclude that the amount of reserves they've created is effectively the right amount for the outlook, but that they need to control yields or try to control yields, both to get stability embedded in the financial system and therefore by cementing yields not just for the government but for corporate borrowers, and also to just try and keep those yields at relatively orderly, relatively low levels. So they could try yield curve control in due course, but clearly with yields close to historic lows and volatility pretty low, really, intraday, short-term volatility pretty low, there isn't really a case for them to be controlling yields at the moment because they are under control.
Yeah, all the talk of it maybe does enough. John, thanks so much. Stay with us. John Wraith from UBS, staying with us on the programme. We'll talk more about Europe in just a moment. We'll talk about Europe as German Chancellor Angela Merkel calls for compromise over an ambitious recovery package. That discussion is next. This is Bloomberg.
Order submitted. Order submit. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order failed. Order submitted. Order canceled. Order submit. Order submitted.
Economics, finance,
canceled.
politics. This is Bloomberg Surveillance. I'm Anna Edwards, live in London. Let's get the Bloomberg Business Flash, a rundown of the top corporate stories we're covering this morning here at Bloomberg. Here's Leanne Gerrans.
Thanks, Anna. Twitter's looking into alternative revenue streams, including a subscription service. Sources told Bloomberg the social network is assembling a new team to look into the possibility. The idea has been discussed for years. There was a previous proposal to charge users for enhanced features, but it's never materialized. The power vacuum at Commerce Bank is set to last a little longer. The supervisory board is extending its search for a new chairman and chief executive. After the previous bosses stepped down following a shareholder revolt, it prolongs the uncertainty for the lender as some investor calls for a broader overhaul of the company. And Wirecard's problems may be growing. According to Dow Jones, the U.S. Justice Department is looking into if the fintech company played a role into an alleged $100 million fraud. 2 businessmen have already been charged. Dow Jones says they're accused of conspiring to trick U.S. banks into approving credit card payments for marijuana products. And that's your Bloomberg Business Flash.
Canceled.
Leanne, thank you very much. Chancellor Angela Merkel has urged EU members to compromise on an ambitious recovery package. The German leader told lawmakers in Brussels a common spirit is needed to confront the biggest challenge in the bloc's history. Her comments pile pressure on states who have resisted a proposed €750 billion fund financed from joint borrowing. Still with us is John Ray from UBS. Let's get his thoughts on what's going on in the Eurozone. John, does the recovery fund, does it seem to you as if it will actually set a precedent, or is it a one-off, as we keep being told by many European politicians?
Order submitted. Order submitted.
Intended to be a one-off, and that fits with the underlying situation, which clearly we all hope is a one-off. It's certainly unprecedented, and this is directly structured and explained to those countries who are reticent to get involved, that this isn't something that's sort of going to lead to a more common, wider move towards fiscal union. But clearly that is a concern for those who don't want to move in that direction. The big question here, of course, is if this amount of money is absolutely needed to address the situation, which I think a lot of us would agree is the case, and that goes back to what we were talking about in the UK as well just now, for example, then it's going to have to be hoped that these countries can put aside their reservations,
order canceled, order
because if they don't, the longer-term consequences are going to be much more serious and ultimately more expensive for everybody.
Order canceled.
So do you think Angela Merkel is saying the right things to win over the frugal four? Is there a path forward that can be found here that wins out, that wins over those countries within the Eurozone and outside, actually, that have been resistant?
Order cancelled.
Yeah, because I think, the right thing to say, given their reservations, is clearly to try and convince them that this is not the start of a sort of step in a direction they don't want to go in, but just something that's essential to address the current situation. I think that's how Angela Merkel is explaining it. The question is whether they can take her at her word, or indeed whether they themselves assess what's going on to be ultimately a one-off necessary emergency response to an unprecedented situation, or a sort of furtive, secretive step in a direction that they absolutely don't want to go in, and we have to wait and see what they think. But if they don't go in this direction, and it's ultimately needed to protect economies from this much worse fate, then the consequences will either end up being more expensive for each and every country in the Eurozone, or potentially very serious for the Eurozone in and of itself.
Order cancelled.
Yeah, indeed. And what about for Italy? We spoke, my colleague Francine spoke to the Italian finance minister. He said they could tap the ESM if they decide to. They haven't decided whether to yet. He said there's no stigma attached to tapping that. Is there going to be a stigma attached to tapping any of this European central support that is available?
Yeah, I don't think stigma is the right word. I think, in times gone by, when economic circumstances were more ordinary and there weren't these extraordinary background situations destroying everybody's public finances to one extent or another, there was stigma. It was seen as the consequence of having mismanaged your public finances or your economic policies. But now I think it's seen as a more sort of rational response to a situation largely outside of your control. The big question, of course, is whether Italy or anybody else is going to be prepared to sign up to the conditions that come with access to the ESM. That obviously remains a major bone of contention for the countries that are struggling fiscally, and they want to have support from the other Eurozone countries with less conditions attached, because they think that's how a union of equal members should ultimately work. But that is exactly where the big bone of contention lies, and why some of the, as you dub them, the sort of fiscally frugal don't want to go down that road. They want the conditions attached.
What kind of path out of this crisis do you expect for the Eurozone economy? How quickly do you think we return, or how slowly do we return to previous levels? And with what kind of, or will there be a more permanent scarring story for the Eurozone?
Well, I think the Eurozone obviously has this extra layer of complexity because of the nature of their union. And the fact it isn't a comprehensive fiscal union, banking union, it only has that monetary element essentially. And when we go through these difficult economic times, it brings those stresses to the fore and makes them more serious. But on an underlying basis, the Eurozone and the countries within it are in the same situation as everybody else with regard to permanent scarring. When do we get back to more normal levels in yields or more normal economic circumstances? The honest answer is, well, when coronavirus is no longer a massive headwind or risk to economic activity. And of course, the only thing you can say to that is nobody knows. If a vaccine comes online sooner rather than later, or if the infection rate is able to be brought under real control while economies get back up on their feet and reaccelerate, then clearly we can hope for a more near-term return to normality, and therefore the scarring will be less serious. But if things unfortunately drag on and the infection rate keeps picking up with no sign of a workable vaccine, then the risk of more permanent scarring obviously rises over time, I think.
Okay. Yeah, I mean, what kind of confidence we can bring back to services-based economies is a really big question. John, thanks so much for joining us. Good to speak to you. John Raith, head of UK and European rate strategy at UBS. Now, Italy, we just mentioned it there in our conversation with John. Italy will tap the euro area bailout fund if it needs to. That is according to the country's finance minister, who spoke exclusively to Bloomberg's Francine Lacroix.
we had to be the first to take the number of lockdown measures that then other countries followed, and which have been essential for containing the virus and also to allow us to reopen gradually the economy. Also, our economic response have been pulled. We are aware that we might revise. There is a risk of revise our forecast, but the data we have so far, the indicators tell us that the possible downward revision will not be so big as other forecasts seem to indicate. So we expect so far to be closer to our forecast. And now we are working on phase two, both at European level and the national level.
The role of states in the economy is increasing all over the globe because of the pandemic. But in your case, in Italy's case, how do you reassure investors who think that state control leads to inefficiencies?
State has to take a stronger role to protect the economy, to bear losses, to inject guarantees or sometimes even capital. But we will do this only when it's necessary. As far as it is necessary, and overall our line is just to be temporary when needed.
The Frugal Four are still, worried about mishandling of public funds. Can Italy do anything to measure success, to have a commitment that you won't deviate from? Is there anything that you can negotiate with? Common sense doesn't always prevail.
The problem of making a good use of the EU funds is a problem of everybody.
Order canceled.
Countries which are supposed to be where this problem is bigger than everybody. So we all have to make the best use of these resources. And by the way, these resources will be based on a mechanism which is very similar to the cohesion money, which have a mechanism which make the resources dependent on the concrete implementation of projects. So you need to have a concrete project. The project has to be, of course, there is a positive ownership of member states in defining their plans, but the plans have to be coherent with the semester and with the common goals of the EU. We think that the Commission proposal has struck a right balance between grant loans, the dimension. We were with other countries for an even bigger fund. So we will oppose any attempt to water down the Commission proposal. We will support the Commission proposal as it is. And as far as the timing, I think that everybody is aware that timing is essential. We have to conclude the negotiation by July, and are confident that the negotiation will be concluded by July.
That was Italy's Finance Minister Roberto Gualtieri speaking to my colleague Francine Lacroix. Coming up on the programme, Australian Prime Minister Scott Morrison suspends an extradition agreement with Hong Kong. We'll bring you more on that geopolitical story next. This is Playback.
Order submitted. Order cancelled. Order submitted. Order filled. Order submit. Order filled. Order submitted. Order cancelled.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance and politics. This is Bloomberg Surveillance. I'm Anna Edwards, live in London. Let's talk geopolitics now. Tensions between China and Australia are ratcheting higher. Following Hong Kong's new security law, Australian Prime Minister Scott Morrison has suspended an extradition agreement with the city. Joining us live is our reporter Anne-Marie Hordern, who's got the details. This is not the first time that, well, Australia not the first country to do this. So what is the latest on this relationship?
Yeah, it's certainly not. More and more countries are expressing concern. Australia, just the latest today, saying they're going to suspend its extradition agreement with Hong Kong. And also they're going to be giving skilled migrants from Hong Kong 5-year visas with a pathway to permanent residency. We also heard from New Zealand. They said they're deeply concerned about the Hong Kong national security legislation from China, and they're reviewing their policy. Canada suspended its extradition agreement with Hong Kong last week. The UK as well is also welcoming its doors to millions of Hong Kong residents. So Australia is now taking a firm stand, similar approaches in the stand against China. Relations, though, between Australia and China have been icy recently. And what makes it a bit more complicated for Australia over, say, Canada or the UK is that China is Australia's by far #1 largest trading partner. But this is just going to flare some of those more tensions. Recently, we have tensions regarding Wuhan when Australia wanted to send in independent investigators. China then imposed tariffs, halting beef imports. So this is definitely going to put more of those relations on ice, Anna.
Yeah, one to watch. The Australian dollar, I see, just up by 0.1% in defiance of all of that geopolitical tension, but certainly an important and significant relationship. Interesting to see the words being used there then. Thank you very much to Anne-Marie Hordern for bringing us that geopolitical look. Things in Europe in terms of the stock picture looking broadly positive. Surveillance continues next.
Order submitted. Order failed. Order submitted. Order failed. Order submitted. Order canceled. 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 Order submitted.
This morning it is a simply
order
too small
submitted.
to be effective.
Order
The Chancellor
submitted.
offers a summer statement that helps, but to many it is
Order,
not
order,
enough
order,
for the
order,
labor
order
crisis
canceled.
to come. In America, Vice President Biden, he will travel to his Scranton, Pennsylvania. He will say no to the hard left. and will offer
Order
a, quote,
submitted.
incremental path
Order
to economic prosperity. He will not, quote,
submitted.
leapfrog political reality.
Order canceled.
And this morning, stocks surge. Gold surges to $18.20 the ounce.
Order
as the renminbi strengthens below
submitted.
7
Order
yuan
canceled.
per dollar. China, they will provide
Order
stimulus.
canceled.
The United Kingdom, they will provide stimulus. Trump or
Order
Biden, you know
submitted.
it, they will provide stimulus.
Order
you get
fell.
the picture
Order
this
submitted.
morning.
Order
Good
fell.
morning, everyone.
Order
Bloomberg surveillance from New York
order
and in
submitted.
London. Anna Edwards in for Francine Lacroix. Anna, so much to talk about here, but I really want to take advantage of your Downing Street expertise. How did the Tory party take the Chancellor's statement? Were they in strong agreement with him?
He has a lot of support within the Tory party. That seems clear. Good morning to you, Tom. So Rishi Sunak, not long in the job, of course, thrown into this incredible task of managing the UK economy through all this. He remains very popular within the party. Interesting to see from the other side of the political spectrum, the criticism, has he not done enough? Maybe he's saving himself something for the autumn, but it will be crucial to watch what happens with unemployment. Now we have an end date and an end mechanism for the furlough scheme that has done so much to support employment in this country, Tom. What will happen when that is gradually pulled away? Just how high will unemployment spike?
What was the response of the nation? I mean, were people riveted to this? I mean, it's summer statement. It's the beginning of the summer. The pandemic is terrible. Were people riveted to his speech yesterday?
I'm not sure if riveted would be quite the way to describe it. I mean, certainly the earlier response when the furlough scheme was announced, that really dominated the day-to-day conversation, the way that this was a Conservative Party stepping in the way that you might have expected a Labour government to do, to bail out people's jobs, to pay people's paychecks. Not necessarily riveted, but the fact he told us to eat out, to help out, to try and save the British summer, and he's given everybody some money to do that. That certainly caused a few eyebrows to raise.
Order submitted.
Well, it'll be interesting, and of course, Anna Edwards later in July, her exclusive interview with Lawrence the Cat on the stimulus that we see from Downing Street. Right now, with our first word news in New York City, here's Ritika Gupta.
Morning, Tom. Anna, Joe Biden will call for a moderate approach towards reviving the U.S. economy today. Bloomberg's learned that in a speech in Pennsylvania, the Democratic presidential nominee will stay away from more ambitious proposals pushed by progressives. Biden's plan covers several areas. They include a push to buy American and incentivize American jobs, clean energy, childcare, elder care, and other domestic workers, and racial equality. The U.S. has set another record for coronavirus cases, according to the New York Times. More than 59,000 cases were reported yesterday. California and Texas accounted for almost 20,000 of them. The rate of positive tests in California has jumped to more than 7%. Governor Gavin Newsom warned that it could quickly spike into double digits. Mexico's President Andrés Manuel López Obrador has sealed an unlikely partnership with President Trump. In a visit to the White House, López Obrador called for more North American trade integration, and he hailed President Trump for his, quote, kindness and respect. Mr. Trump remains unpopular south of the border after calling Mexicans criminals and rapists during the 2016 campaign. And it was a record-setting first half of the year for hedge funds, and not in a good way, according to the firm hedge fund research. They lost 7.9% on an asset-weighted basis. None of the four major strategies made money. Event-driven funds were the worst performers, losing almost 10%.
Order submitted. Order fell. Order submitted.
Bloomberg Quick Take,
Order
powered
cancelled.
by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Anna, Tom.
Order
Order canceled.
Equities, bonds, currencies, commodities. Let's look at the data right now. It's really, really interesting this morning. We've got the same old story in equities with a little bit of fragile red on the screen, but green on the Nasdaq 100. That indicates those high-flying tech stocks like Amazon and Apple. Bond market's quiescent. I would notice the 30-year bond. It comes in 2 basis points to a 138. The U.S. 30-year bond really showing again bonds just pressured down. Worried about the economy and what we will see in Q3 as well. The news items are gold out really near a recent record high, 1820, even 1822 an ounce on U.S. Pricing of gold. That's not near the record high of 2011, but we're really getting up there rather quickly. And the bellwether news this morning is to see the Chinese renminbi strengthen through 7 to 6.98. That's the onshore Chinese yuan. That's a huge signal of the stimulus to come that I mentioned in China. And Edward, it's an important day for Chinese renminbi strength.
Yeah, absolutely. I've got Chinese stocks in my data check, Tom. We see some resilience there for the 8th day of gains on the Shanghai Composite. Here in Europe, European equity markets pulled in 2 directions. The FTSE weighed down by Rolls-Royce, the DAX boosted by cloud computing and SAP. I put the pound in here as well, Tom, because I want to go to our next guest on a UK conversation. We talked about what the Chancellor had to say yesterday. Seema Shah, Principal Global Investors, Principal Global Investors, Chief Strategist, of course. Seema joins us now. And Seema, I want to ask you for your response to the UK Chancellor. Was he saving something for autumn, do you think? Did you get that sense?
I think we have to hope he
submitted.
is.
Order fell. Order submitted.
What he announced yesterday really isn't enough to offset the removal of the furlough scheme. And if we really think about fiscal policy as something of a bridge financing,
order fell. Order submitted. Order fell. Order submitted.
Normal activity returns, we're just not there yet. And certainly the UK economy, just like everywhere else, needs a continuation of this kind of fiscal support that they've been receiving.
He told us how he's going to get out of the furlough scheme, though, didn't he, yesterday, Seema? And he's put in place incentives for businesses to rehire those people who are on that scheme. What are your worst fears, though, now about UK unemployment and how high it goes?
I think it can rise pretty significantly from here. You know, what we have seen is in the UK and in other European countries, they just haven't seen the kind of increase in unemployment that we've seen in the US. And the reason is simply because of these furlough schemes. You know, companies just haven't had to let go of their employees. Once you take that away, even if you have that £1,000 sweetener, that's simply not enough for many companies to keep their employees in. I just don't think that the UK economy is strong enough at this stage. Order fell. Order submitted. Going to struggle to rebound.
Order canceled.
Seema, Tom Keene in New York. Good morning. I'm really interested here on how these worries about the labor economy extend out the economic recovery everyone's talking about in Q4 or even out to Q1 of next year. Does Principal just assume that it will be a slower recovery?
We do. We think it's going to be very protracted. When we look at this, yes, there has been a rebound on a lot of the data, but that to us is really down to a lot of the pent-up demand that accumulated during the lockdown now being released. But of course, that can be satiated. There's a limit to that. From then on, we have to start thinking about the scarring. And that's when, of course, we have to think about the labor market, about the rise in unemployment. We've seen what happened in the US and the UK. It's probably likely to come. And alongside rising unemployment comes rising bankruptcies. So unfortunately, we think this is going to take a long time to return to normal. And it's important for governments, extremely important for governments to step in and to maintain a lot of the help that they have been providing.
This goes to what Anna Edwards said just moments ago.
Do you just imply that in terms of stimulus, what we're seeing from a chancellor is just another tranche and there's just a certain assumption of another set of aid in September or November of this year?
I think so, and what's interesting is that when we think back to March, when a lot of the governments around the world first announced their fiscal policies, what they had, I think, assumed is that this would be over within about 3 months, that things returned to normal, and activity would be progressing. Actually, the truth is that this is not happening very quickly. So, stopping it here or even in 3 or 4 months probably isn't going to be enough, and it's going to be a struggle for governments to withdraw a lot of help, even though you can see that there is reluctance starting to creep in everywhere about extending these schemes.
Order cancelled.
Seema, from a monetary policy perspective, do you expect to see in the UK that negative interest rates or yield curve control, or are they just so low that right now none of that would make much difference?
Yeah, I think it's the latter. I don't think it makes that much difference. I think, for most, at least for the UK and for the US, negative interest rates is probably their last resort. It's the one thing that they don't want to do. And I think they already have almost implicit yield curve control. If we did see a lot of the issuance needs that governments are going to be putting through starts to pressure yields, gilt yields and treasury yields higher, then I think central banks will step in at that point. But I think that the hope is that what they have done is enough, but the onus is now on governments to maintain a lot of the support.
UK banks have been keen to be part of the solution to this crisis, Seema, rather than being the problem as they were 12 years or so ago. If we saw negative interest rates, would the UK banking sector be ready for that, do you think?
Order submitted.
I don't think so, and I think that we just have to look to Europe for evidence of the struggles that a lot of the banks have had. We hear that they simply haven't liked the negative interest rate scheme for obvious reasons. It eats into their margins. In the UK, one interesting thing is that over the years, as negative interest rates have come up over and over again, the issue of building societies is such a significant part of the UK savings economy. Of course, once real rates are so low, the building society issue is less important. But we have to be worried that we don't want to be producing monetary stimulus, which is counterproductive. And I think the marginal benefit is probably too small at this stage to justify going down that road.
Order submitted.
Seema Shah, thank you so much. And we will continue here. Really, really interesting conversation, folks, setting up the economics and the mystery of labor. Again, American weekly jobless claims. We'll see that at 8:30 this morning. And then what follows, Michael Wilson will join from Morgan Stanley with our John Farrow, the Open, and the 9 o'clock hour. This is really a timely conversation. Wilson has been dead on about the advance of the stock market. Stay with us from London, from New York. This is Bloomberg.
Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order fell. Order submitted. Order canceled. Order fell. Order submitted. Order canceled.
This is Bloomberg Best, your weekly review of the most important business news analysis and interviews from Bloomberg Television around the world.
Order fell. Order fell. Order submitted. Order canceled.
We are always stronger for that mixture. Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle
Order submitted.
that they have to monitor the content.
What is one word of advice?
Order canceled.
Learn how to listen. And that is certainly something
order
submitted.
Well.
Ankiti, where do you go from here? It's a huge
order canceled.
I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
Order submitted. Order submitted. Order fell. Order submitted.
We feel like we can maybe help people out
more. Order canceled.
Number of big ideas.
Travel, we did not know when it was going to return, and we knew
that when travel returned, it would be different. It would never be the same.
Order submitted.
Bloomberg Surveillance from New York, from London. We welcome all of you. Anna Edwards in for Francine Lacroix in London for a bit more this morning. Right now we're with Seema Shah from Principal, and we're thrilled that she could be with us because we're seeing a little bit of the correlated tensions of the market, looking at the economy, looking at the pandemic, and trying to reach out, it's that bridge of the road, whatever you want to call it, out to 2021. Seema, it's a great metaphor, the bridge out to 2021. How are the foundations of the bridge right now? Can we get there in one piece?
Orders submitted.
I think it's going to be a little bit difficult. I think there are some encouraging signs around the world. I actually think Europe has dealt with this really well. And I guess what's been interesting is that unlike the US, European data hasn't really popped that much higher. It has improved, but it hasn't moved really, really quickly. And I think that's a good thing because ultimately you don't want to see markets, you don't see the economy moving very, very fast because that means that people are losing a lot of the caution that they need during the virus. So actually slow and steady could potentially win the race in this.
I want to go all FX on you. What does it signal that we see dollar resiliency, maybe a little bit weaker here recently, but I'm going to call it dollar resiliency. What does it signal that we see Chinese yuan through 7 with new renminbi strength?
It's been very interesting with China. When we look at the emerging markets, certainly we do prefer a lot of the emerging Asia region, certainly more than Latin America, and China within that. They're first in, first out. They've done very well with obviously controlling the virus, and also with getting activity at least back to some semblance of normal. So it makes sense that they're doing very well, and certainly that the currency is following suit. Maybe we have some concerns that it's going too far, too fast. But if any country is going to do particularly well, I think it makes sense that it's China.
Yeah, well, do you go to Asia then, Seema, to get exposure to cyclicals, or is it too early for that even in Asia?
I think it's a little bit early everywhere. I mean, look, there's always space for cyclicals, but we have to be very, very selective. From a sectoral perspective, we really like technology, but that also plays very well for many parts of Asia. So, we do like South Korea, we like China, we like Singapore. We like Latin America and India a lot less because it seems that they're just struggling more with the virus. But I think there are spaces for the cyclical space. It just needs to be very selective.
When we look at the geopolitical tensions that seem to be plentiful, Seema, between China and the US, China and the UK, China and Australia, is there a danger for the Chinese growth story in some of this geopolitical tension, or will China remain immune?
No, I think there is certainly a risk, and we should not ignore that by any means. But I think this is something which is it's a pot which is going to be boiling for a very, very long time. This is not going to just happen overnight where suddenly China feels the pain. And over that time, the Chinese government is going to be very astute to trying to work out different ways to get around and maintain various areas within domestic growth rather than having to be so dependent on the foreign factor.
Seema, fold this in to my confidence to own equities now. I mean, we can talk about economics all we want. We had the mother of all rallies off the bottom. Very few people have really participated in it. How does Principal recalibrate to have confidence to own stocks?
Yeah, it's a great question. And it's one of the things that we get asked so much by investors. Look, we increased our equity exposure in the middle of March. We all know that, look, trying to sell at the time of panic is probably the worst thing you can do. But at the same time, over the last few weeks, we've dialed back a little bit of equity exposure, but we haven't gone underweight. And the reason is central banks. There is so much liquidity flowing around that inevitably it finds its way back to equities. So in the worst case scenario, they are a backstop. So we don't see much gains, certainly not a repeat of Q2 happening in Q3 or Q4, but we don't see a retesting of the bottom. And we just think that at most we're probably going to see a period of consolidation for a couple of months.
Well, it can be a period of consolidation, but you've got the uniqueness of the tech stocks going up. Does that just signal that everybody's grabbing revenue there? Everybody's grabbing revenue growth, rather?
No, okay, again, a really, really key here. You know, when we look under the covers, we're seeing that, of course, it's really the strength of the equity market has really been focused on the tech sector. That's telling us two things. One is that there's still a lot of caution. Investors are not throwing out going into cyclical space. They're really focused on the technology side. The other thing is that, look, yes, technology is very expensive, but there's a secular story there. It's just accelerated a lot of the trends that were already in play. Now, as long as regulation isn't something which is looming large over technology right now, we still like technology, even though valuations are quite expensive, of course.
What about healthcare? I'm hearing a lot of people talk about it. And it's not just the pandemic. And today, folks, in the United States, we see articles on hospitals again running out of supplies because of the seriousness of this pandemic. But as a general statement, what does Principal Group think of the outperformance of health stocks after they've done so well?
We think there's a little bit more juice left. I don't think we feel as strongly for healthcare as we do for technology. But again, it's another secular growth story. If anything, what we have to think about in this virus is how do people live with the virus going forward, not just post-virus. And technology is one of them. But of course, just the increased urgency and need for healthcare amongst people worldwide just means that healthcare stocks should at least have that support mechanism, even if we don't feel that they can outperform just as much as they have done.
Perhaps the new zeitgeist. Seema, thank you very much. Seema Shah, Principal Global Investors Chief Strategist. Thanks for joining us to give us your views here on Bloomberg Surveillance. Later today, an exclusive interview with Rob Arnott, Research Affiliates Chairman. That is at 2 p.m. in New York, 7 p.m. London time. This is Bloomberg.
Order submitted. Order filled. Order submitted.
Wants to go higher. It got a little spooked
Order
by the
canceled.
idea that geopolitical tensions are rising.
Order canceled.
This is
Order submitted.
Tesla may crack the full autonomy puzzle this year. Musk
Order canceled.
is very close to developing self-driving vehicles. Tesla is in a race with Alphabet, General Motors, and others to develop the first 100% driverless car. Sales have started to recover at Europe's largest tech company. Germany's SAP reported better than expected preliminary results for second quarter revenue. The company's cloud revenue jumped 21%. SAP also was boosted by a resumption of software deals in Asia. And US companies slashed dividends in the second quarter at the fastest pace since 2009. That's according to S&P Dow Jones indices. Shareholders saw a net reduction of almost $43 billion in payouts on common stock. The pace of the cuts now appears to have slowed down. That's your Bloomberg Business Flash. Tom, Anna?
Thank you very much. Here in Europe then, Tom, we are thankful for SAP, if you're long of these markets, because that seems to be doing a lot of the heavy lifting the Xetra-DAX to being up nearly 1%. Elsewhere in Europe, we're sluggish.
Very good, Anna. I'd say over here again, as I said at the top of the hour, we're really watching some most interesting dynamics. Gold moving up again, up to new recent highs, getting right buttressed up against the 2011 high, which I believe was 1880, maybe 1885 an ounce. Without question, the number one data item of the day is the Chinese renminbi strengthening from 7.02 to 7, and then coming through to 6.98. That's a stronger yuan with huge signaling to the equity markets, not only in China, as Anna Edwards mentioned, but also worldwide as well. You see that with the continued green on the screen for the Nasdaq 100 in early futures hours of America. We've got much more coming up here. Please stay with us on economics, finance, investment. Order submitted. Order canceled. Order submitted. Order fell. Order submitted. Order fell. Order submitted. Order canceled. Order fell. Order submitted. Order canceled.
Ha ridotto l'inquinamento e ha fatto riscoprire la bellezza di tanti luoghi liberi dal traffico e dai rumori. Ora con la ripresa dell'attività tutti dovremmo essere più responsabili. Order fell. Order submitted. Apprezzo le molteplici iniziative che in ogni parte del mondo nascono dal basso e vanno in questo senso. La crisi provocata dal coronavirus ha messo in luce l'esigenza di assicurare la necessaria protezione anche alle persone rifugiate per garantire la loro dignità e sicurezza. Vi invito a unirvi alla mia preghiera per un rinnovato ed efficace impegno di tutti y a favore della effettiva protezione di ogni essere umano, in particolare di quanti sono stati costretti a fuggire per situazioni di grave pericolo per loro o per le loro famiglie.
Order submitted. Order canceled. Order submitted. Order canceled.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points. So continuing in this knee-jerk
Order submitted.
Good morning, everyone. Bloomberg Surveillance from New York, from London. Thrilled you're with us this morning. One of the things that's true about China is you have to read up, you have to read in. There's all sorts of good books to read. I love George Bagus's recent effort talking about President Xi. What you need to focus on is someone like Lord Patton. Well, he'll read his Jonathan Spence from years ago, but it'll also read more recently Jonathan Fenby. Jonathan Fenby has been prodigious in writing about the Chinese experiment, and particularly the revolution that has been how Hong Kong has changed. We're thrilled that Jonathan Fenby could join us this morning. John, thank you so much for being with us. The speed of change in Hong Kong has shocked everyone. Where will Hong Kong be in 6 months?
Order submitted.
Hong Kong in 6 months' time will be even more politically
order
under the
canceled.
Of Beijing, of the mainland. There's clearly an assimilation integration process
submitted.
Will affect Hong Kong's position as a business
order canceled.
Dynamic is clearly there. Beijing has been getting ready for this for some years now, which I've tracked over the last 4 or 5 years, and has now definitely made sure that the one
order submitted. Order fell. Order fell. Order fell.
Order submitted. Order canceled. And for that matter, your excellence on France as well. How do you presume that these new political constraints will fold
order submitted.
To
order fell. Order submitted.
In Hong Kong, medicine in Hong Kong,
order canceled.
And for that matter, general society?
Well, education certainly. We've already seen signs of that in school, with textbooks being vetted, and there'll be a promotion of what's called patriotic education. That's to say, to bring it into line with
order fell. Order submitted.
Thinks that education
order
is
fell.
very important,
order submitted.
And hopes that it will be a further contributor to reducing dissent in Hong Kong.
Order canceled.
I think society generally will become that much more cautious.
Order submitted. Order fell. Order fell. Order submitted.
The Hong Kong spirit, which
order
has been
canceled.
A lot behind Hong Kong's position as such a vibrant business and financial centre.
And Jonathan, good morning to you. When you look at how we got to this place, the
between
relationship Hong
canceled.
Kong and China and the rest of the world,
order
do you
submitted.
see it as inevitable? Do you look back to handover and say this was always going to happen? Or was there room for this to turn out differently?
Well, if you take the period immediately after the handover in 1997, the high degree of autonomy that was promised to Hong Kong certainly seemed to be applying. But it's really in the last 4 years or so where you've had a much stronger leadership in Beijing, which has put the emphasis on centralization, on harmonization, as it's called,
order submitted.
Across
order fell. Order submitted.
In this direction, and then the protests which broke out last summer, and which the Hong Kong government showed itself unable to deal with, I think really pushed Beijing into saying, we are the masters now, we are going to decide what one country, two systems means, and abrogated the authority for that from Hong Kong, the Hong Kong executive, the Hong Kong legislature, to the National People's Congress in Beijing. So it forms part, what's happening in Hong Kong forms part of a broader
order canceled
of power concentration and accumulation by the Communist Party and Xi Jinping in Beijing.
Order fell. Order submitted. Order submitted. Order fell. Order submitted. Order canceled.
Other countries should not meddle in Chinese affairs, but with the UK and Australia offering paths to citizenship and being very critical of the security law, does any of that matter?
No, I don't think that's going to deflect Beijing at all. I think it's got its game plan and it's moving ahead with that. We saw just
order canceled.
Moves on the internet to control the internet.
Order fell. Order submitted. Order fell. Order submitted. Order canceled.
Get on perfectly well with the rest of the world.
Order submitted. Order fell. Order fell. Order submitted. Order canceled.
Respect what China does. China's actions, and particularly China's actions within its own borders, and that applies above all to Hong Kong.
And John Fenby, one final question here, and we'll come back on Europe, on France as well. And that is simply, how do you gauge the future prosperity of financial Hong Kong? To all of us, there was just a religion to us. There was a path. There was a philosophy to finance and banking in Hong Kong. Is it forever gone?
No, I don't think it's necessarily. I think Beijing we're still in the political phase, if you like, of this national security law and the change in the relationship, the status of Hong Kong. But I think
order submitted.
Medium, longer term, Beijing
order submitted. Order canceled.
Hong Kong as an important financial center, as a conduit linked to the dollar.
Order canceled.
For funding and financing in and out of China. So Hong Kong as a financial center still, I think, has a future, but it will be on different terms.
Order
John Fenby with us, and he will continue with us, and we'll look to his expertise on France and the continent of Europe. We've got much more coming up. Right now, though, in New York City, with our first word news, here's Ritika Gupta.
Thanks, Tom. The number of coronavirus infections worldwide has now gone over 12 million, and a fourth of those have been in the U.S. By one count, the U.S. set another record for new cases yesterday, with more than 59,000.
Order canceled.
40% of them. The Supreme Court is expected to rule today on President Trump's tax records, the issue whether Congress and Manhattan District Attorney can see tax returns and other financial documents the president has fought to keep private. The president has lost so far at every step, but the records haven't been turned over pending a final court ruling. And China's top diplomat blasted U.S. policy towards Beijing. Foreign Minister Wang Yi accused the Trump administration of being driven by
order fell. Order submitted. Order fell. Order submitted.
Economies back on track. Wang also called for cooperation on the coronavirus.
Order canceled.
Netanyahu is consolidating powers as he tries to rein in a second coronavirus outbreak. Parliament has given his cabinet the power to take any decision needed to curb the disease, and the Domestic Security Agency has been given the authority to resume contact tracing.
Order submitted. Order fell. Order submitted. Order fell. Order submitted. Order canceled.
Quick take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta.
Order fell. Order submitted. Order fell.
Thanks so much. Greatly appreciate it, Ritika. Right now, that is it for Anna Edwards. She's had an arduous day. She needs to get ready for an exclusive interview with Lawrence the Cat on the summer statement by the Chancellor. Anna Edwards, thank you so much. Francine Lacroix will step in here in a moment with our coverage in London. We've got much more, and particularly on the pandemic. The governor of New Jersey, looking forward to David Weston in conversation later today. Please stay with us. This is Bloomberg. Good morning.
Order canceled. Order canceled. Order filled. Order submitted. Order filled. Order submitted. Order filled. Order submitted. Order canceled.
Can't continue. Half worried
order submitted.
Half rejecting science. We absolutely need a clear message.
Order submitted.
That everyone needs to wear a mask
Order filled. Order submitted. Order canceled. Order submitted. Order filled. Order submitted. Order submitted.
Some things you see coming. Some things you don't.
Order canceled.
Pablo from Infrastructure Support is working every day to keep essential market data flowing
Order submitted.
seamlessly.
Order filled. Order submitted. Order filled. Order canceled. Order canceled. Order submitted. Order filled. Order
Good morning,
submitted.
everyone.
Order
Bloomberg
filled. Order
surveillance. It's a
submitted.
movable cast of characters. Francine Lacroix, I have no idea what she was doing this morning. It was a football match late last night or whatever. Probably tutoring her children. That's probably what it was getting through the first raft of tutors this morning.
Order canceled.
The only time that embassies
are
open
submitted.
in many European countries,
order filled. Order submitted. Order submitted. Order canceled.
Because your boss is super happy that you have to take half.
Order
to go
submitted.
and get your passport renewed. It's like perfect timing.
Order canceled.
Well, it's really interesting. It speaks seriously, Francine. It speaks to so many of the tensions that our viewers and listeners are feeling about moving kids and moving themselves around. Every company's dealing with the visas and the green cards and all that. Why don't you continue, Francine, with Mr. Fenby?
Yeah, I mean, order submit.
Order filled. Order filled. Order submitted.
I leave the set for an hour.
Order submit. Order canceled.
Now, let's talk about France with Jonathan Fenby. He's at TS Lombard, chairman of
Order
China
filled.
Research.
Order filled. Order filled. Order submitted. Order canceled. Order filled. Order submitted. Order canceled.
We also had a reshuffling of the
order
canceled on Monday. Is this going to be a new
submitted.
beginning for this
Order
government
filled.
and for this president that wants to stay ahead of the polls ahead of the election in a couple of years?
Well,
order canceled.
Of Jean Castex, an experienced civil servant as Prime Minister, really means
order submitted. Order filled. Order filled. Order submitted. Order submitted.
Presidents of France often do this, shelter behind his Prime Minister who go on with the day-to-day business. But I think this is generally seen as signalling that Macron is, taking an even higher profile himself.
Order canceled.
Say is in view of the run-up to the next presidential election in a couple of years' time.
What does a new path look like under this new Prime Minister?
Submitted.
I mean, the party was actually dealt quite a blow during local elections last month.
Order cancelled.
Well, people are unhappy. They're often unhappy in France. You know, unhappiness is
order submitted. Order fell. Order fell. Order fell. Order submitted. Order cancelled.
And Macron is seen by quite a lot of people as being out of touch by his supporters in the centre left, as having gone to the right and so on. And he's lost ground. The local elections, which you mentioned there a moment ago, the Greens, kind of protest parties, did well out of this. And he's got to rebuild ahead of steam for the next presidential election. It must be said, as has been the case throughout with Macron, that apart from Marine Le Pen and the National Front, there is no strong opponent, no strong contender for his position. So he's got to really refashion his message going ahead for the next presidential election, or he hopes re-election.
Jonathan Fenby, what does the shock of pandemic do to the huge desire of the French to Paris to be a new part of modern 21st century capitalism? Is the pandemic help Paris compete with London, or does it hinder them?
I think it put Paris a bit on the back foot here. As for London, I'm not too sure how London will come out of that. But Paris really, the growth of Paris, as you say, is a financial centre and business centre. It depends largely on the development of the European projects. And there, of course, France and Germany are working together on new schemes to strengthen the euro, partly through the relief for the pandemic. And I think France's future and Macron's future is pretty bound up with Europe.
It's really interesting to me. I have no idea what the answer is to this question. Jonathan Fenby, what does the party structure look like in France in 2 or 3, even 5 years? Does the right have a voice as they had with Le Pen?
No, if Le Pen fails to unseat Macron at the next presidential election, as I think she will fail to do so, and Macron is re-elected, the problem really is that his party has not established itself as a strong, deeply rooted national party, and so you're going to get fragmentation and increasingly presidential politics.
Thank you so much for joining us this morning. Jonathan Fenby, the T.S. Lombard Chairman of China Research. Now, coming up later today, Glenn Hubbard, the Columbia Graduate School of Business Professor of Economics and former Chairman of the U.S. Council of Economic Advisors. That interview coming up 12:30 p.m. in New York. That's 5:30 p.m. in London. And this is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg Business Flash. Bed Bath & Beyond plans to close 20% of its stores over the next 2 years. The home goods retailer operates more than 950 locations in the US and Canada. Like many retailers, Bed Bath & Beyond is trying to scale down, increase its e-commerce business and negotiate with landlords. The pandemic lockdown sent sales plummeting 49% in the latest quarter.
Order
Sales
canceled.
drought has gotten worse at Airbus. For a third month this year, the European plane maker failed to get any orders. Last week, Airbus announced plans to cut 15,000 jobs at its jetliner unit. The company lowered its build rates by 1/3 in April. And Warren Buffett is dropping it down the ranks of the world's richest. His $69 billion fortune puts him in 8th place on the Bloomberg Billionaires list. That's the lowest Buffett has been since the index started in 2012. You can blame his generosity in part. Buffett gave away almost $3 billion of Berkshire Hathaway stock this week. He's also been passed on the rich list by tech billionaires. And that's your Bloomberg Business Flash. Tom Francine.
Ritika, thank you so much. Now, yesterday we had a conversation with the Italian Finance Minister, Roberto Gualtieri. Tom, what's interesting, for example, for Italy, is that there's a lot of pressure from previous politicians for Italy to accept the ESM credit lines. But of course, a lot of people say there could be some kind of stigma attached. So I asked that question to Mr. Gualtieri, and he says no, they're keeping the possibility of tapping into the ESM.
Orders submitted.
We had to be the first to take the number of lockdown measures that then other countries followed and which have been essential for containing the virus and also to allow us to reopen gradually the economy.
Order submitted.
Also, our economic response have been bold. We are aware that we might revise. There is a risk of revise our forecast, but the data we have so far, the indicators tell us that the possible downward revision will not be so big as other forecasts seem to indicate. So we expect so far to be closer to our forecast, and now we are working on phase 2.
Order failed. Order submitted. Order canceled.
The role of states in the economy is increasing all over the globe because of the pandemic. But in your case, in Italy's case, how do you reassure investors who think that state control leads to inefficiencies?
State orders submitted to inject guarantees or sometimes even capital, but we will do this only when it's necessary, as far as it is necessary. And overall, our line, it has to be temporary.
Order canceled. Are still, worried about mishandling of public funds. Can Italy do anything to measure success, to have a commitment that you won't deviate from? Is there anything that you can negotiate with? Common sense doesn't always prevail.
The problem
order
of
submitted.
Making a good use of the EU funds is a problem of everybody, of course. There are not countries which are supposed to be where this problem is bigger than everybody. So we all have to make the best use of these resources. And by the way, these resources will be based on a mechanism which is very similar to the cohesion money, which have
order submitted. Order submitted.
Makes
order failed. Order submitted.
Dependent on the concrete implementation of project.
Canceled.
So you need to have a concrete project. The project has to be, of course, there is a positive ownership of member state in defining the plans.
Order canceled.
But the plans have to be coherent the semester and with the common goals of the EU, we think that the Commission proposal has struck a right balance between grant loans, the dimension we were.
Order fell. Order submitted. Order fell. Order canceled.
We will, of course, oppose any attempt to water down the Commission proposal. We will support the Commission proposal as it is. And as far as the timing, I think that everybody's aware that timing is essential. So,
order canceled.
We have to conclude the negotiation by July, and I'm confident that the negotiation will be concluded by July.
Order submitted. Order fell. Order fell. Order submitted.
Losing streak. Investors trying to keep faith that the economy won't be as bad as maybe we thought 2 months ago. They've also been helped by some reassuring earnings news. Dollar fluctuating. I did want to show you, Tom, also the offshore yuan, renminbi rising $7 to its strongest since mid-March, and gold holding above 1,800 an ounce.
Yeah, no question about it. Those are the two data items today to see gold go through, not to the 2011 highs, folks, but really buttressed up nicely against that, but new recent highs as well. I can't say enough, folks, about the symbolism of Chinese yuan, the onshore yuan going through a 7 to a 698. That's a stronger yuan and really underpins this belief in China, in the United Kingdom, and indeed in the U.S. of stimulus to come to continue to support the markets, and we're clearly seeing that within the equity markets over the last number of days. Maybe today is the day the Nasdaq 100 will go down. We will see. We've got much more coming up. Daniel Katzen will join us with a good market briefing as well. Stay with us from London. From Manhattan, this is Bloomberg.
Order fell. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order fell. Order fell. Order submitted. Order canceled. Order canceled. Order submitted. Order canceled.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to
Order submitted. Order submitted. Order fell. Order submitted.
And that is certainly something that has served
Order
me
canceled.
well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Order canceled. Order submitted. Order canceled.
This morning, millions of Americans are furloughed, and, well, they may become laid off or fired.
Order
it is a
submitted.
grim picture. The jobless claims report, it is at 8:30 this morning.
Order canceled.
Vice President Biden, he will travel to his
Order
Pennsylvania.
fell.
He pictures a path to victory. He says no to the hard left
Order
and
submitted.
will offer a, quote, incremental path to economic prosperity. He will not, quote, leapfrog political reality. And, well, you know the story, you know the drill. Stock surge, gold surges to 18.20 the ounce. As the renminbi strengthens below 7 yuan per dollar. China will provide stimulus. The United Kingdom will provide stimulus. Trump or Biden, you know it. They will provide stimulus.
Order submitted.
Good morning, everyone. Tom Keene in New York. Francine Lacroix in
Order
London.
fell.
Thrilled you're with us on a Thursday. Francine, everybody's really talking, and this goes back to the Chancellor's speech yesterday and what we'll hear from Vice President Biden today about a labor picture. And Francine, this shift from a pandemic and furloughed over to a real question about job layoffs.
Yeah, Tom, I think this is the time, especially, I mean, in the UK, so we had that mini budget from the Chancellor yesterday. That gives a little bit more support to workers. But again, if you look at both the furlough schemes in the UK and what's happening in the US, you could assume that, you know, some of the money would run out by the end of the summer. And so this is the exact time, Tom, to look at the, you know, permanent shifts to the labor economy and what could come in the next 2 to 3 years.
We got a terrific hour for you folks. William Janeway is scheduled to be with us later. I can't say enough about his abilities, and we'll talk to him, of course, about Mr. Buffett, mergers and acquisitions. Right now, we acquire the First Word News in New York City. Here's Ritika Gupta.
Morning, Tom. Francine. Joe Biden will call for a moderate approach towards reviving the U.S. economy today.
Submitted.
Bloomberg's learned that in a speech in Pennsylvania, the Democratic presidential nominee will stay away from more ambitious proposals pushed by progressives. Biden's plan covers several areas. They include a push to buy American and incentivize American jobs, clean energy, childcare, elder care, and other domestic workers, and racial equity. The U.S. has set another record for coronavirus cases. According to the New York Times, more than 59,000 cases were reported yesterday. California and Texas accounted for almost 20,000 of them. The rate of positive tests in California has jumped to more than 7%. Governor Gavin Newsom warned that it could quickly spike into double digits. Mexico's President Andrés Manuel López Obrador has sealed an unlikely partnership with President Trump. In a visit to the White House, López Obrador called for more North American trade integration, and he hailed President Trump for his, quote, kindness and respect. Mr. Trump remains unpopular south of the border after calling Mexicans criminals and rapists during the 2016 campaign.
Submitted.
And it was a record-setting first half of the year for hedge funds, and not in a good way. According to the firm Hedge Fund Research, they lost 7.9% on an asset-weighted basis. None of the 4 major strategies made money. Event-driven funds were the worst performers, losing almost 10%.
Order
News 24
submitted.
hours a day on air and at Bloomberg Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. We've talked about it a lot this morning. Real simple. Stocks sort of
submitted.
Flat is where I'd put it right now. Nasdaq 100 showing some strength. It'll be amazing to see where we are in 2 hours. Yield not part of the story. You see the story in gold. I'll let Francine talk about renminbi, but gold moving up nicely. A real surge yesterday and a little bit of follow through the day above 18.20 the ounce. Francine?
Yeah, Tom, I wish we could spend a bit of time actually just looking at, you know, the Shanghai Composite in general, because there's quite a lot going on, especially in the last couple of days. Chinese equities once again outperforming as we saw an 8th day gains. That helped by signals of official support, but also strong demand from retail traders, which is why I actually put renminbi in my data check. I think it's a good thing to focus on, above 7 per dollar to its strongest since mid-March. Gold, I know we talked about it yesterday, Tom. Today holding above 1,000. 800 announced that European stocks snapping this 2-day losing streak.
Order canceled.
Right now, we'd like to go to the system, and the deepest part of the system is foreign exchange. Those different pairs, it's where you measure the market, where you gauge the correlations to other asset classes. Daniel Kitsev does that at BNP Paribas. Of course, BNP Paribas claimed for their mathematical acuity, particularly in derivatives. We're thrilled that Dan Kitsev could join us this morning. Dan, what is the signal right now of stronger yuan and a relatively resilient U.S. dollar? What does that signal given all of the stimulus that's out there?
Order fell. Order fell. Order submitted.
Yuan, a stronger moving gold that you've been talking about.
Order canceled.
And they're starting to pile up.
Order fell. Order fell. Order submit. Order canceled.
I mean, this month, and to us, it seems like the dollar's on the brink of potentially a big adjustment lower versus some of the core currencies.
Order submitted.
How would you play that? I've got to go right to the idea of making some money here. How do you play a weaker dollar? Which pair is most efficacious?
Well, to us, the ones that have really missed out so far, the core pairs, dollar yen and euro USD, these are pairs that are pretty far from what we consider equilibrium levels. They've been held at these levels. The dollar's been strong for a couple of years because U.S. carrying rates have been high, and there's been willingness to hold dollar exposure. All the reasons for dollar strength are beginning to evaporate or have evaporated. So
order submitted.
Daniel, good morning from London. What's the read across for gold? I don't know whether it's signaling something that we should be looking at, or it's just symptomatic of what you've just been talking about.
Order fell.
I think it is symptomatic. It is signaling something. It's telling us that dollar vulnerability in gold is going to do well in an environment where rates are very low, where there's some uncertainty
order submitted.
On the
Order fell. Order fell. Order submitted. Order canceled.
Gold also does well during periods of dollar weakness. So to us, it could be an indicator that the dollar's, the beginning of the adjustment that a lot of us have been waiting for a long time. Order considering all the big adjustments in the global economy we've seen over the last 6 to 12 months. G10 FX really hasn't gone anywhere, but we're seeing in some of these other places like gold that there are macro things happening, which could be
order fell. Order submitted. Order
canceled. I'm going to ask you, actually, as head of FX strategy, do you now also have to have a gold call?
The commodity team forecasts gold, and for us, a lot of the gold move that they've been looking for has already happened. So that is consistent with our expectation. We think gold actually might come off a little bit in Q4 of this year, even as the dollar is beginning to weaken more steadily versus G10 currencies. So gold's kind of moved. Now FX is to catch up, and gold might lose some ground versus some of the other G10 currencies.
Dan Kitsev, what is the actual mechanism or thing, I should say, that will cause dollar weakness? I mean, on a partial differential basis, there's got to be that one thing
order submitted.
That forces
Order
the move.
fell. Order fell. Order submitted.
To me, the main drivers of weaker dollar are already in place. We may be surprised that we start to see dollar weakness become a driver for other things. So, often in FX, we're looking at equity markets, we're looking at rate differentials, we're looking at commodities to tell us where FX is going to go. If the dollar begins a big adjustment lower,
order fell. Order canceled. Order canceled.
That it's other markets that are saying, "Oh, why is my market moving?" It's because of the dollar.
Order submitted. Order fell. Order submitted. Order fell. Order submitted.
Can you make a study of interest rate dynamics and bring it over to an FX call at the zero bound with massively negative real rates?
Well, when nominal rates get anchored at zero, near zero, and stop moving around much, their explanatory power for FX collapses as well. We've seen that before.
Yes.
We do think that the explanatory parity of real rates can start to rise at that point. So nominal rates don't move, but for example, as inflation expectations begin to go up in the U.S. relative to other economies, you could see U.S. real rates come down more quickly. And what that creates is a dynamic where, good news in the U.S., success at reflating the economy in the context of anchored rates just makes the U.S. real rate get more negative. And so the dollar starts to get in this good news for the U.S. economy becomes bad news for the dollar kind of dynamic. We're starting to see that now.
Order submitted.
Daniel, what's going on in offshore yuan? So it's risen above $7 per dollar.
Order filled. Order canceled.
Again, how does that translate into your expectations for dollar?
I think it's also consistent with the pattern of broad dollar weakness. I mean, there was a period a few months ago where it seemed like U.S.-China tensions might push
order filled. Order submitted. Order submitted. Order canceled.
Higher in the dollar. People thought that the renminbi was being engineered weaker. You could have seen that causing some pressure on the dollar pairs to appreciate broadly. That hasn't happened, and I think now we're starting to see dollar renminbi trade more like other dollar pairs, with the dollar looking vulnerable.
Well, that was beautifully explained. Dan Katzeff there with a real clinic on nominal and real yield dynamics here at the zero bound. We're going to continue with Dan Katzeff of BNP Paribas. Really looking forward to John Farrell's conversation with Michael Wilson of Morgan Stanley. I believe that's in the 9 o'clock hour. Morgan Stanley has just been lights out on market moves, negative and then very positive in the recent months. Stay with us from London. From New York, this is Bloomberg.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we were talking about renminbi, we were talking about dollar. Let's get back to your foreign exchange with Daniel Katzeff. He is BNP Paribas, head of FX strategy for North America. Daniel, thank you for staying with us. When you look at euro, so I don't know whether euro at the moment seems to be fairly valued, but there's a lot of political risks. There's Brexit. You don't know whether this recovery fund will actually get through because of some of the frugal countries. And then it just seems that, this could be a make or break point for Europe yet again.
Yeah, I think you're right. There is a political risk with respect to the euro. But the point that we make from an FX perspective is that whatever Europe does. It doesn't have to be, it's not going to be perfect. They're not going to probably deliver a recovery plan which ticks everybody's boxes and is conducive to the kind of framework that a lot of people want to see. It just has to be good enough, though. I mean, so in other words, we need to avoid systemic stress in Europe. As long as you see peripheral bond spreads tight or tightening, you don't see any concerns about ability to fund at auction, things like that, the kind of concerns that we saw back in 2010, 2011. As long as those remain at bay, and it seems to us that what Europe will deliver will be sufficient for that, then the dollar really is the driver, and euro-dollar can move up from what we think are pretty depressed levels. So back a few months ago, it seemed like systemic problems in Europe were going to keep the euro anchored. Now it seems like Europe's going to do at least a sufficient amount to keep those systemic concerns at bay.
Where do you see the most, I guess, the most value depending on where it's now? I don't know if there's a currency that is particularly volatile or that you think around the world is just not fairly valued at the moment.
In G10, it's euro, USD, and dollar yen where there's the biggest move if the dollar is really going to have a big adjustment towards equilibrium, and we think there's a chance that there will be. This will happen in the second half of the year. Dollar yen in particular has been really kind of the dog that doesn't bark. It's been incredibly stable and it hasn't moved even during periods of big swings in equity markets. It has not moved nearly as much as we've gotten used to seeing it over historical times. To us, there's a big exposure that could be hedged, could create a momentum move lower in dollar yen. We've watched that pair very closely. Hasn't happened yet, but that's one where, if you start to see momentum build, it could become a snowball effect where dollar yen falls back to 100 very quickly.
Yeah, Dan, this has been the great miscall. I mean, to make clear here, folks, on dollar yen, if you go from 107 to 100, that's a stronger Japanese yen. And I get the idea that everybody's looking for stronger yen, but it hasn't happened. Again, what will be the mechanism to make that big shift to a truly stronger yen, even through over 4 or 5 years to 95 yen? How's that going to happen?
I think it's, there's a great question. The main challenge to the weak dollar thesis is that if it was going to happen, why hasn't it already happened? And it's very hard to argue against that because it's observationally true.
Order fell. Order submitted. Order canceled.
Risk aversion episode, a big move lower in equities, a big spike in equity volatility to create the spark which leads dollar yen lower. People held the yen in their portfolio as a insurance hedge for a long time. I think that's not really worked out. But the real route to a sustainably lower dollar yen is really the dollar route. So you could wind up in a period where with U.S. real yields falling, the return on staying exposed to dollars is just too attractive for Japanese investors not to hedge. And the cost of hedging has come down quite a bit with volatility being low and rate differentials being very tight. You could start to see this hedging process, which just sees the dollar begin to fall even during periods where equities are going up, and this would kind of create that snowball effect.
Order submitted. Dollar good for America?
Order canceled.
Yeah, I mean, I think
order
the dollar
canceled.
is on the expensive side of equilibrium now, so on net there should be some negative for U.S. growth associated with that. And
order fell. Order submitted. Order canceled.
FX, and that we've seen in FX really just aren't big enough to move the needle too much in terms of U.S. growth. The U.S. has not got a huge external sector, so unless you get a really, really big move in the dollar, and even bears like us aren't looking for a really big move. Unless you got a really big move, it's not going to probably be something that moves the needle that much.
Daniel, what do you do with Brexit and pound?
Well, this is obviously a huge month for Brexit, as you know. I mean, I think the most likely scenario coming out of this month is that there'll be some kind of deal which allows pound to retain some of the gains that it's made and even extend some of those gains even versus a otherwise strong euro.
Order fell. Order submitted. Order fell. Order submitted.
Pound could reverse some of the upside that we've seen very quickly.
Order canceled.
So it's quite binary. and makes it very difficult for investors to manage risk.
Daniel, overall, when you look at emerging markets, how difficult is it to make a difference?
Order submitted. Order submitted. Order canceled.
With the pandemic and COVID-19.
I think the bigger challenge for emerging markets is that we're looking at a less globalized world, and when we come out of the pandemic, whenever that is,
order submitted.
The same framework that we saw over the past 30, 40 years.
Order canceled.
We're moving in a less globalized direction.
Order submitted. Order fell. Order submitted.
So
order canceled
in the past may not work as well, and so I think that's the big challenge, is that we've kind of maybe turned a corner from a
order submitted. Order fell. Order fell. Order fell. Order canceled.
The virus, regardless of who the next U.S. president is, we don't know exactly what kind of world we're heading into. Otherwise, valuations look very attractive. The currencies are cheap. U.S. real yields are low, as we've been discussing. Dollar looks vulnerable. Lots of liquidity coming out of the central banks. All these things would, in the normal world, in the old world, point you towards a big recovery in the end.
Order fell. Order fell. Order submitted.
Thank you so much with BNP Paribas.
Order fell. Order fell. Order canceled.
In a bit. Coming up, we've got much more to talk about. I do want to bring to your attention Dean Hubbard of Columbia, former Dean of Columbia Business School. Order submitted. Order submitted.
Order canceled.
With the gentleman from Florida.
Order canceled. Order submitted. Order canceled. Order fell. Order submitted. Order fell. Order submit. Order fell. Order canceled. Order submitted. Order fell. Order submitted. Order fell. Order submit. Order fell. Order canceled. Order submit. Order fell. Order fell. Order submitted. Order canceled. Order submitted. Order fell. Order submit. Order cancel. Order fell. Order fell. Order submitted. Order submit. Order canceled. Order canceled. Order fell. Order canceled. Order canceled. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled.
When everything around us, including the way we work and live, has been interrupted, uninterrupted
Order submitted.
is peace of mind. submitted. Support is responding to a 500% increase in daily call volume. No matter what.
Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order submitted. Order submit. Order canceled.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg Business Flash. Elon Musk predicts that Tesla may crack the full autonomy puzzle this year. Musk told a conference in Shanghai that the electric car maker is very close to developing self-driving vehicles. Tesla is in a race with Alphabet, General Motors and others to develop the first 100% driverless car. Sales have started to recover at Europe's largest tech company. Germany's SAP reported better than expected preliminary results for second quarter revenue. The company's cloud revenue jumped 21%. SAP also was boosted by a resumption of software deals in Asia. And U.S. companies slashed dividends in the second quarter at the fastest pace since 2009. That's according to S&P Dow Jones Indices. Shareholders saw a net reduction of almost $43 billion in payouts on common stock.
Order submitted. Order submitted.
That's the Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. The market's focusing on a couple of things. So first, we always look at gold since the huge increase that we saw over the last couple of days. We also look at renminbi after it jumped on a couple of news over in China. Overall, though, if you look at European equities, they're pretty much a little changed. And Tom, I do think we had some better than expected figures from SAP that gave a boost to some technology stocks in Europe as well.
Yeah, you see technology do better here as well with the Nasdaq 100 green on the screen, even if a little bit of a softness to equities. Coming up without question, your must-listen conversation on mergers and acquisitions. William Janeway will join us next. This is Bloomberg. Good morning.
Order submitted. Order canceled. Order canceled. Order submitted. Order fell. Order submit. Order fell. Order submit. Order canceled.
This experience may sort of revitalize some of my
order submitted.
Young girls and women to
order canceled. Order canceled.
Inspire young men to recognize that these are things people do, not only men or only women.
Order submitted. Order submitted. Order submitted. Order canceled.
More aspects of our life and well-being are determined by and set by the ocean
canceled.
Most of us think about. Every other breath you take, you can consider that as oxygen provided by plankton in the ocean. That's how critically
order submitted. Order submitted
on the ocean around us.
Order canceled.
It's such an interesting new world.
Order submit. Order fell. Order submitted. Order submitted.
We have an enormous number of big ideas.
travel, we did not know when it was going to return. And we knew that when travel returned, it would be different. It would never be the same.
Order canceled. Order submitted. Order filled. Order submitted. Order submitted. Order canceled.
It got a little spooked by the idea that geopolitical
order canceled. Order canceled.
Bloomberg Surveillance from New York, from London. We welcome all of you today. Right now, without question, our conversation of the day on our state of globalization and the state of all that money out there looking for a warm spot. This is a general statement. Call it mergers and acquisitions. William Janeway joins us. His book, Doing Capitalism, was definitive a number of years ago, but far more is his high technology and innovation study across all of his career, always associated with Warburg Pincus. Bill Janeway, it's been way too long. Thank you for joining us today. You've just written an essay for Project Syndicate on the death of globalization. How dead is globalization?
Well, I call it the retreat from globalization because it's a work in process, and it's coming along multiple dimensions and at different rates of speed. Clearly, the impact of the global financial crisis had a major impact when banks that knew they were global in their business found out that they were local in their need for support from their own national central banks. That was the first real extreme moment. But similarly, in the impact of the pandemic, the multinational corporations that had developed extraordinarily extended supply chains enabled by information technology, of course, discovered that, again, they had to turn to local governments, national governments, for support, for bailouts, when the crisis disrupted those supply chains and disrupted their ability to deliver goods, get paid for them, and meet their obligations. So what was global on the upside turned out to be national on the downside.
There has to be a response to this, and Bill Janeway, as you know, everyone's got cash up to their eyeballs. We see Mr. Buffett taking out the infrastructure, the midstream pipelines of Dominion the other day. Where is all that money going to end up? I mean, what does Apple do with their money? What does Google and Microsoft do with their money? What does Carlyle Group or any other Cerberus and all of them? Where does all that money end up?
Well, first of all, the cash flow surplus didn't just begin with the pandemic. It goes back particularly to the Trump tax cut, which was supposed to stimulate investment in the fundamentals of the economy. Instead, what it financed was an enormous surge in what was already very large, and that was buying back shares by public companies to boost or maintain their own stock prices rather than investing in the fundamentals of growth. But even if that funding had gone into national and individual corporate investments, which mostly it did not, it would not have done the work that is truly needed in this U.S. economy, not just of rebuilding infrastructure that for the last 30 years has been crumbling away right across the country, but transforming that infrastructure into much lower carbon, much more green basis for economic growth in the future. This is a huge opportunity, and it's tragic. U.S. Exceptional Grant DeLong, a friend of yours as well as mine, just had another Project Syndicate article that American exceptionalism now looks like the distinctive ability to screw up response to the pandemic, but it also is the U.S. is exceptional in its national government, still in denial over not just the reality of climate change, but the enormous opportunity it represents to invest productively in creating jobs and bringing the country back together. That's an opportunity for the next administration.
Bill, you talked about the retreat from globalization, even if there is a new team in charge at the White House come November. how difficult is it going to be to re-engage with globalization like it was in peak 2013, 2014?
Order fell. Multinational corporations that constructed the supply chain were animated by the drive to reduce costs to the minimum. And there's a great line that I think Ranu Faraha of the Financial Times used, that we moved into a just-in-time economy and gave up the sense of needing insurance backup, second sources, a just-in-case supply chain management policy. I think we're going to see, just as the banks have had to hold greater reserves to protect themselves from financial embarrassment, corporations are going to have to build up, invest in resilience and robustness, which will reduce profitability. That's not in the market, obviously, but I think it's inevitable as management comes to grips with how vulnerable their operations turned out to be with this disruption.
But if you look at trade, technology, the economy and finance, where will the most radical changes come from?
Well, I think that one of the opportunities here, as we just began this conversation, Tom was saying that merger and acquisitions are the big subject of the day. Fact is, we've been living for 25 years essentially without any competition policy, any antitrust enforcement in the U.S. And that has led to a concentration in the tech industry of an extraordinary extent. It's easy to forget that it wasn't just the U.S. Defense Department and DARPA that was responsible for making the U.S. the unquestioned leader in the digital revolution. It was also the work of the U.S. Department of Justice and its antitrust division, which forced AT&T to license the fundamental technologies to the world and forced IBM to create an independent software industry, allowing the digital giants from Facebook to Microsoft and back again by way of Apple and Google to sweep up any possible innovative challenger to their extraordinarily monopoly positions in the market has been a great failure of public policy. I think that the debate over that is active, real, and it will lead to change going forward.
William Janeway, you and your family have been definitive in the linkage of Princeton University to the University of Cambridge. Your commitment to that dialogue has been noted across all of economics. Tell me what you see now is the reigning theory forward in economics at those two institutions. Do we have to radically adapt and adjust our theories coming out of the financial crisis and now coming out of this exogenous shock, this pandemic?
Order submitted.
Yes, I think it's clear that we must. The dominant economic theory going into the financial crisis assumed that the aggregate economic performance of an economy and of the world economy was the result of the optimizing, utility maximizing behavior of a rational representative agent who understood all the consequences of her action and could adjust those actions in order to get the best possible world. That blew up pretty thoroughly in 2008. And what we're seeing now across the board is the construction of a new, what are called micro foundations for economics more generally, which reflect the revolution in behavioral economics, which reflect the fact that we have many, many people with different characteristics. They have different amounts of wealth. They have different degrees of risk aversion. They live in different networks. They behave differently. And they can, even when they're doing the best they can for themselves, they can produce what we call a coordination failure. That's what happened in 2008. And the most interesting economic statistic of the pandemic is the way that before there were any lockdowns, consumer demand and consumer purchasing fell off. People moved to protect themselves and produced a slowdown in demand even before the lockdown killed supply. That is fascinating. You can't account for that in the old theory. It needs the new economics that is coming out, not just from Cambridge, but globally.
William Janeway will do this again soon, of course, formerly with Warburg Pincus as well. William Janeway. Right now, in New York City, our first word news. Here's Ritika Gupta.
Thanks, Tom. The number of coronavirus infections worldwide has now gone over 12 million, and a fourth of those have been in the U.S. By one count, the U.S. set another record for new cases yesterday, with more than 59,000. Texas and California accounted for almost 40% of them. The Supreme Court is expected to rule today on President Trump's tax records, the issue whether Congress and the Manhattan District Attorney can see tax returns and other financial documents the president has fought to keep private. The president has lost so far at every step, but the records haven't been turned over pending a final court ruling. China's top diplomat blasted U.S. policy towards Beijing. Foreign Minister Wang Yi accused the Trump administration of being driven by, quote, McCarthy-style paranoia. He proposed a blueprint for getting relations between the two biggest economies back on track. Wang also called for cooperation on the coronavirus. In Israel, Prime Minister Benjamin Netanyahu is consolidating powers as he tries to rein in a second coronavirus outbreak. Parliament has given his cabinet the power to take any decision needed to curb the disease, and the Domestic Security Agency has been given the authority to resume contact tracing. Netanyahu says the crisis requires extraordinary steps. His critics say he's undermining democracy. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Now, later today on a conversation on COVID-19 and masks, the New Jersey Governor, Phil Murphy, joins us at 5 p.m. in New York. That's 10 p.m. in London. This is after New Jersey has now required face masks, I believe, to be worn outdoors while in groups to curb the spread of COVID-19. You don't want to miss that interview. That's coming up later. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Good morning, everyone. Bloomberg Surveillance. Thank you so much for being with us. Francine Lacroix in London. I'm Tom Keene in New York. On the political front today, well, it's not about the president. It's about the vice president. And no, not the gentleman from Indiana. Vice President Biden And the line they're using is he's coming out of the basement to give a really important speech. Jared Bernstein, who appears on the show often, is advising Vice President Biden about an economic speech in Scranton, Pennsylvania. Our Jack Fitzpatrick joins us now for a briefing. What will be the goal today for the Vice President, Jack?
Well, he's going to lay out a plan to respond economically to the coronavirus that in some ways you could describe as moderate, but in some ways you could describe as aggressive. He's got a lot of leeway, or whoever the president will be after the election will have a lot of leeway to keep spending money to try to rebuild the economy. But this is not going to be focused on some of the more progressive stuff you heard from other Democratic candidates. It's not going to be sort of a Medicare for all Green New Deal kind of thing. It's going to be about incentivizing American jobs. Order
canceled.
Jack, well said. Guess what? He's running down the middle because he has to take Pennsylvania in the election or he's toast. How upset is Elizabeth Warren? How upset is the senator from Vermont?
Well, you know, he's got this task force working with Bernie Sanders to try to kind of come up with a middle ground in the Venn diagram of the issues they care about. And obviously, Biden is not going to turn into Bernie Sanders.
Canceled.
But, you know, there seems to be some cooperation there. And to be honest,
canceled.
It's probably everybody agrees with you. He needs Pennsylvania, and yet in the polls we've seen so far, there are a lot of pathways forward for Biden, and very few pathways forward for Trump. So I think he's simultaneously trying to kind of take a pragmatic approach, but he's not ignoring, in the name of centrism, the voters who preferred Sanders or Warren or those types.
Order canceled. Order canceled.
So does it need someone who, you know, rallies the troops, or does it need to be someone from one of the states that he needs to win?
Well, I mean, what we've heard from him is he wants to pick a woman of color. That's kind of the specific area that he's pointed to, which is not surprising, especially with the focus now on civil rights issues and policing. So I don't think the state that the future VP pick for him is from is necessarily pivotal. I think there's got to be some ideological agreement. But you know, as I said, he's maybe played both sides in terms of taking somewhat of a centrist approach, but not exactly abandoning progressives. So I think that's still an X factor as long as there's some more diversity on the ticket and it's someone who personally he can work with.
Jack, thank you so much for the update. Jack Fitzpatrick, there, our Bloomberg government reporter. Now, up next, Jason Farley, Johns Hopkins professor of nursing. We track, of course, COVID-19. We look at the number of deaths and infections across the world. This is Bloomberg.
Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order canceled. Order submit. Order canceled.
Order submitted. Order filled. Order submitted. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order submit. Order submitted.
Some things you see coming.
Order submitted.
Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Order canceled.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this order submitted. Order
canceled.
Let's get the Bloomberg Business Flash. Bed Bath & Beyond plans to close 20% of its stores over the next 2 years. The home goods retailer operates more than 950 locations in the US and Canada. Like many retailers, Bed Bath & Beyond has tried to scale down, increase its e-commerce business, and negotiate with landlords. The pandemic lockdown sent sales plummeting 49% in the latest quarter. The sales drought has gotten worse at Airbus. For a third month this year, the European plane maker failed to get any orders. Last week, Airbus announced plans to cut 15,000 jobs at its jetliner unit. The company lowered its build rates by one-third in April.
Canceled.
And Warren Buffett is dropping down the ranks of the world's richest. His $69 billion fortune puts him in 8th place on the Bloomberg Billionaires list. That's the lowest Buffett has been since the index started in 2012. You can blame his generosity in part. Buffett gave away almost $3 billion of Berkshire Hathaway stock this week. He's also been passed on the rich list by tech billionaires. That's your Bloomberg Business Flash. Francine?
Rudica, thanks so much. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we'll bring you insight from experts in public health, infectious disease, and emergency preparedness. Joining us today from Johns Hopkins University is Professor of Nursing and Infectious Disease, trained nurse and epidemiologist. He is Jason Farley. Jason, thank you so much for joining us. First, we're collecting data to see who's had antibodies. Does it tell us only who's had the virus? I mean, what have we learned of the percentage of the population that have had the virus and possibly immune to it now?
Order canceled.
States and local regions, and they used
order submitted.
Commercial lab.
Order canceled.
Geographic regions. They took samples that were used for other tests and tested them for antibody. And what they found was that the increased actual prevalence of antibody positivity was between 6 and 24 times higher than current estimates. And so just really large estimates of population penetrance of this virus. And so what that means, however, is to be determined. We don't know how many people got tested and have already lost antibody. We don't also know how many people might have tested false positive.
Order submitted.
So it's a really important
order canceled.
And it really tells us that we are missing still a lot of cases in the community.
So, Jason, so infections between 6 to 24 times higher rates of infection. What does that give us? Like 10% of the population could have already had COVID-19?
Order canceled. Are generally less than 5%, but when you look really at these numbers,
order submitted.
in some localities, So it's really critical that people continue all of the non-pharmacological interventions, social distancing, mask wearing, and really just understand that a fairly large number of people in a geographic region have been exposed to the virus.
Jason, another, I guess, repercussion because of COVID-19 is that the student and exchange visitor program in the U.S. has been modified. So people that had a visa but now are on online courses have, I believe, been asked to maybe go back to the countries where they were initially from. Does that mean that this is also being used as an immigration policy?
Order canceled.
Well, it's certainly putting restraint on the ways in which we in colleges and universities across the country can flex our programs for the fall. We had restrictions for the F1 visa program, the visa program that allows foreign nationals to study in the United States.
Order submitted. Order fell. Order submitted.
Summer. We have now received word that is not going to be the case for the fall, suggesting that anyone on a visa for academic purposes must attend face-to-face classes. They can attend at most one class fully online, which really hampers our ability to think about the ways in which we plan for the fall semester. In other words, faculty, staff, students who are on F1 visas, the students in particular on F1 visas must be in a classroom face-to-face and not online.
Order submitted. Order canceled.
Frankly, when we think about the ways in which we can offer education to those students.
Order submitted. Order submitted. Order canceled.
VRUS Go on the Bloomberg for the latest information, and tune in every day for exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, US equity futures are actually fluctuating. We are getting the American jobs data tomorrow. It could offer an insight into a key insight into the recovery of the world's biggest economy. The dollar is pretty much steady. We did have a bit of move on renminbi, currently at 6.9850. Treasuries edging higher. Gold holding above 1,800 an ounce. Coming up, join Tom Keene, Jonathan Farrow, and Lisa Abramovitz for more Bloomberg surveillance.
Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Order submitted. Order canceled.
Bloomberg Television
Order canceled.
Join me to see the news program for the clever investor.
Order submitted. Order submitted.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect,
order
one
canceled.
country, two systems.
The central government is telling us just stay out of politics.
Order submitted. Order canceled.
The ventilator here.
It's got to be the real economy that performs. Otherwise, none of these companies are going to be able to make it through to 2025.
Order submitted. Order canceled.
Blinded a lot of investors about what are the global tensions
order
going on. And
canceled.
right now, the biggest global tension is the war between China and U.S. for sort of global positioning.
Order submitted.
Jonathan Farrell
Order submitted.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with equity futures negative. We're live on Bloomberg TV and radio alongside Tom Keene. Together with Lisa Bravitz, I'm Jonathan Farrow. Tom Keene, in 90 minutes' time, jobless claims in America, speaking to the pain in the labor market. And later, the former Vice President Joe Biden going to Pennsylvania to tell us why he's best placed to deliver the recovery this country needs.
John Farrell, the unemployment rate published in Scranton, Pennsylvania, always a tough coal mining economy there. Scranton, Pennsylvania at 15%, but you know it's much higher. And that key weekly indication, John, of jobless claims, 1.4, 1.3, maybe it's a good number, 1.1 million. We're nowhere near normal. And that speech will directly address this American labor economy.
Tom, it might get better, but it is not normal, and the numbers will still be ugly. Lisa, despite the sequential month-on-month improvement we've seen, we expect to see some elevated jobless claims again in around about 90 minutes.
And I think one of the main things people are looking at is the continuing claims, which are expected to tick a little bit lower, a good thing, but not that much lower, still near 19 million continuing claims. We're going to get those numbers at 8:30 a.m. A lot of people parsing the churn that you've been talking about, John, under that in terms of people getting re-laid off after getting rehired. I'm also watching at 1 p.m. the U.S. is selling $19 billion of 30-year bonds. Yesterday's auction of 10-year notes came with a record low yield of 0.65%. Interesting to see whether the demand will be there for the even longer dated bonds, even amid a deepening deficit. And then, as we're talking about Joe Biden, former vice president, Democratic candidate, heading to his childhood home near Scranton, Pennsylvania. Interesting that he's taking a more moderate approach than some more left-wing Democrats are calling for, John. Interesting that this is coming at a time when he's trying to present himself as an alternative to President Trump, really taking this election to a referendum on President Trump's tenure rather than necessarily on a more progressive platform, John.
And the president trying to frame him as a Trojan horse for the radical left. I'm sure that will be the campaign structure for the months to come. Down in Washington, D.C., we'll catch up with Kevin Cirilli a little bit later this morning. We begin the program, though, by talking about this market. We can bring in Rob Waldner of Invesco. Rob, you've made it pretty clear. You think it's time to move to a more cautious risk stance on risky assets. I'll start with a short one.
Order submitted. Order submitted.
John, thanks for having me this morning. What's driving markets here is really policy, right?
Canceled.
I'll give you a few statistics. We have, we talked about treasuries just a moment ago. Real yields in the treasury market are very low. So if you look at real yields, they've continued to decline. We have 5-year real yields about minus 100 basis points. Real 10-year yields minus 80 basis points. We have a Fed that continues to be active in the market, which is the reason why we've gotten this big bounce off of the bottom. If you look at what happened in June, it becomes very, very clear that is what's driving things. So in June, we saw investment grade, which we know that the Fed is buying, continue to rally. investment grade spreads tightened by about 24 basis points or so in June. High yield did not rally as much. Spreads tightened much less, and bank loans kind of went sideways in June. And the reason for that is that the IG is very closely tied to Fed policy, as the Fed is actually buying. So our mantra has been buy what the central banks are buying, buy what the central banks are supporting, because the fundamentals themselves, underlying fundamentals around disease, are not that positive.
Rob, Dan Kasov of BNP Paribas was lights out in the last hour talking about, nominal yields can stay where they are, folks, the visible interest rate that we see, and yet with rising inflation, those real yields could drive ever lower. I have trouble believing that's a stable process. Will that be a stable process, or do you look for bond price volatility?
Order submitted.
Well, Tom, the Fed, I think, is trying to make sure that's as stable a process as possible. Treasury volatility, so take the MOVE index, for instance, which is a measure of Treasury volatility, is at its lows. So the Fed, I think, is with their forward guidance and what their policy going forward will be to try and maintain that stability in the short end of the market, at least, so that you can have these real yields continue to decline. Obviously, there's a breaking point where they may lose control, but that will be well in the future in our view. So they will continue to be able to control the level of nominal rates to some extent. And if inflation expectations rise, which they have been recently is priced in the market, that means real yields go down.
Order canceled.
Rob, what does a cautious stance mean at a time when there is discretion in markets, where you have the best quality assets with extremely high prices and the riskiest assets, the ones where you see companies closest to default, priced as such? How are you cautious in this environment?
So what we would advocate is, own what the Fed is buying, own what the central banks are buying. So in Europe, that is corporate bonds. In the U.S. here, it is IG. It is mortgages, because those assets, will be supported. The central banks are driving that. We're a little bit more cautious on assets that are more dependent upon the economic recovery. So the economic recovery clearly bottomed. I think some good news in our view is that we bottomed a little bit, less down in the United States in terms of the economy. It didn't dip quite as much as we were fearing. But this reopening process is in train, but it is not clear to us at all how this reopening process is going to go, especially given the viral pickup that we've seen in some states recently.
Rob, Lisa touches on something really, really important now. Everybody is crowding into the same trades. You're not the first, you won't be the last to come on this program and talk about following the Fed, going into US investment grade. Do we need to think about redefining what is considered safe in this market?
Well, I'm sure that when I came on the program the last time, I would have said exactly that, which is buy what the Fed is buying. And, the fact is that in June, that worked. In June, that worked. We think probably in July, that'll continue to work. Redefining what is safe, that is a fundamental problem for the market here, John, because, the safe asset now has very, very little yield to it. So as we think about building portfolios, and I think this is a portfolio construction question, really, right? But with such a low rate of yield for the risk-free asset, we need to think about other assets that we can use to support that. And again, investment-grade bonds, spreads are what, 140 over right now. Investment-grade bonds where the risk of imminent default is not there. The volatility comes in spread, and the Fed is in managing that volatility. That seems like a pretty safe asset to us.
Rob, where's the unsafe asset? I mean, the real question here is, I get the idea of IG, but where do I not want to be in fixed income?
Well, I think the things that you might want to be that require, so rather than say don't want to be there, where you really have to do your fundamental work is in assets that are more directly tied to specific sectors of the economy. So we know, for instance, the high yield default rate has picked up. We're running about 3.5%, I think, now in high yield defaults. That's not a big number. But there are hidden in that, there are idiosyncratic issues. We know the defaults have picked up in energy and a couple of other sectors. So, what we would say, Tom, is those things that are tied more directly to the economic outcomes, you need to do homework on.
John, I find this conversation so interesting because, to your point that you were talking about earlier, a lot of people are following the Fed. Initially, it was trying to front run the Fed. Now it's don't fight the Fed and follow the Fed. And you're seeing this in flows incoming into the biggest investment grade corporate ETF. I just want to give you this nugget. There has been $1.2 billion put into this fund in the past week alone, with another $202 million put overnight. This trend has not gone away. And it does raise a question, John. At what point has the Fed fully been priced in, and are they going to be unwilling to continue to backstop credit markets? And how does that rearrange what we are going to see going forward?
Lisa, it's an important question, and I think Rob's addressing the portfolio construction component of that question. I think it's really important, Rob. In the next drawdown, in the next downturn, what's going to give me that downside protection in my portfolio with 10-year Treasury yields just stuck between 10, say 60 to 70 basis points on a 10-year?
Well, you make a great point, Jonathan, which is that there's obviously much less downside for yields in portfolios right now. So you have to be a little bit more sophisticated in how you build your portfolio. And again, investment grade is a good way to think about adding some safety. But the traditional way of using treasuries as your risk-free asset, to your point, is 100% valid, which is there's much less downside available in yields right now, so much less underlying protection, if you like.
Rob Waldner, always appreciate your time, sir. Our best to the team over at Invesco. Rob Waldner there of Invesco Advisors. Tom, there's a real problem here, and that's grappling and dealing with two shocks. The first shock is all at once up front. It's the shutdown. The second shock is the persistent water torture of an economy operating below capacity for an extended period of time. And that's what we're wrestling with right now.
Yeah, I thought it started with a Goldman Sachs research note of, say, 10 days ago or so, John, but there's a massive mystery here about summed economic growth or aggregate demand within the United States into the third quarter. And, John, I would think within days we're going to start to hear the experts try to frame out Q4, which to me is a complete total mystery.
A lifetime away. Never mind Q4. Let's get to the end of Q3, shall we, Tom Keene? And somewhere close to the election this November, we'll talk about the upcoming election and an upcoming speech from the former Vice President Joe Biden on the economy in Scranton, Pennsylvania. We'll catch up with Kevin Cirilli down in Washington, D.C. in just a moment. In your equity market, down 5 on the S&P, negative a little more than 1/10 of 1%. Alongside Tom Keene, together with Lisa Brammitz, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Order canceled. Biden will call for a moderate approach towards reviving the U.S. economy today. Order canceled. Away from more ambitious proposals pushed by progressives. Biden's plan covers several areas. They include a push to buy American and incentivize American jobs, clean energy, childcare, elder care, and other domestic workers and racial equity.
Order submitted. Order submitted. Order submitted.
More than 59,000 cases were reported yesterday.
Order
and Texas accounted
canceled.
for almost 20,000 of them. The rate of positive tests in California has jumped to more than 7%. Governor Gavin Newsom warned that it could quickly spike into double digits. And Mexico's President Andrés Manuel López Obrador has sealed an unlikely partnership with President Trump. In a visit to the White House, López Obrador called for more North American trade integration, and he hailed President Trump for his, quote, kindness and respect. Mr. Trump remains unpopular south of the border after calling Mexicans criminals and rapists during the 2016 campaign. It was a record-setting first half of the year for hedge funds, and not in a good way. According to the firm Hedge Fund Research, they lost 7.9% on an asset-weighted basis. None of the four major strategies made money. Event-driven funds were the worst performers, losing almost 10%. And Elon Musk predicts that Tesla may crack the full autonomy puzzle this year. Musk told a conference in Shanghai that the electric car maker is very close to developing self-driving vehicles. Tesla's in a race with Alphabet, General Motors and others to develop the first 100% driverless car. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Order submitted. Order failed. Order submitted. Order canceled. Order submit. Order failed. Order submitted. Order canceled. Order submit. Order submitted. Order canceled. Order submitted. Order failed. Order submit. Order canceled. Order submitted. Order failed. Order submitted. Order canceled.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Order canceled.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification.
Order submitted. Order submitted.
Is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Order canceled.
I think the world has seen the true colors of the Chinese Communist Party, and I am convinced more than ever that the free peoples of the world will come to understand the threat that's presented.
Secretary Mike Pompeo taking up a prominent position inside the administration as a China hawk. How will the former Vice President Joe Biden position himself a little bit later in his speech in Scranton, Pennsylvania? From New York City this morning. Good morning to you all. Alongside Tom Keene, together with Lisa Bravitz, I'm Jonathan Ferro, live on Bloomberg Radio and TV. In your equity market right now, Tom, down just 3-4 points on the S&P, off by a little more than 0.1%. Politics, front and center, Tom, the economy and the former Vice President. Top of the pile for me later today.
Order submitted.
It's going to be really, really interesting to see, and we are so advantaged here at Bloomberg Surveillance to have somebody that really understands the tapestry that Mr. Biden will try to set in Scranton, Pennsylvania. His parents did not work for Dunder Mifflin, of course, the iconic paper company in the TV show The Office, but Kevin Cirilli knows the fabric of northeastern Pennsylvania and Scranton, Pennsylvania, because he lived it growing up just south. Kevin Cirilli, our chief political correspondent this morning. Kevin, why is the president selected, the vice president, why is the vice president selected Scranton for this presidential speech?
Order
socially distant, and he's able to get there from Philadelphia, where the campaign is headquartered, given the dynamics of the virus. But from a theatrical optics standpoint, this is the working class type of community that the vice president wants to win over. Remember, Trump won Pennsylvania for the first time since a Republican's ever done it since 1988, back in 2016. So Biden wants to pick that up. Polls would suggest now with a Democratic governor that he might be able to do that. But we got to focus on the policy here, because Jared Bernstein, who has been the longtime economic advisor to Vice President Joe Biden for years now, has crafted a very moderate, centrist approach to reopening the economy. It focuses on workforce development. It focuses on infrastructure to some extent, and of course, racial inequality.
Right.
So he's trying to bridge the progressive and the centrist wings here, and he's been relying on some other folks.
Submitted.
Former Commerce Secretary Penny Pritzker has also been working with the Vice President's
Order canceled.
Kevin Cirilli, what's so important here, and I have the clearest memory in that first Tuesday of November 4 years ago, staring at the screen and staring at your suburbs of Philadelphia and knowing something historic was happening. Can this speech pull the marginal voter in those Philadelphia suburbs towards Vice President Biden?
Order submitted.
Well, in order for Democrats to win the White House and to flip the Senate, they need to outperform in the suburbs around the country, not just outside of Philadelphia, but around the country in counties like it. And so, that's why I think you're seeing such a concentrated effort to win back the suburbs. We saw it in the midterms, and that's why they were able to make gains in the House of Representatives. But now with the Senate in play for Democrats, they're really focusing on the suburbs and towns like Scranton.
Order submitted.
Kevin, free trade does not win elections in 2020. And the former Vice President has got to try and convince the American electorate that he will be harder on trade situations with the country of China. China, that's the president's way of talking about it again and again and again, and it resonates with the public. How does the Vice President change that today?
So Democrats are saying that they want to win back allies in the global order, so to speak, with Europe joining the United States to pressure Beijing into behaving more like a good actor. And so until that, they're saying that it can't be just a go-it-alone approach, that it has to be America with Europe and with the coalitions from the World Health to NATO to every world coalition that we've seen. Republicans are pushing back on that. President Trump says only he can be as tough on China. But you're absolutely right. In terms of the USMCA deal, that's a message that Republicans want to take to states like Michigan, states like Wisconsin, because that's something that President Trump campaigned on, that he would get rid of NAFTA. And he's going to try at every twist and turn to link Joe Biden to NAFTA.
Order canceled.
Kevin, just taking a step back, we're finding out more about Vice President Joe Biden's platform, and it seems like it is not that radically different than President Trump's when it comes to economic policy, when it comes to trade. Is he trying to paint himself as the status quo but without the drama? Is he trying to basically paint his campaign as a referendum on President Trump rather than getting people enthusiastic about him and his platform per se?
That is absolutely correct. And when I talk with sources on the Biden campaign, that's exactly what they're saying. There was a phrase in Washington during the Obama years of "no drama, Obama," and so Biden is really trying to embrace that, inherit that in many ways, and suggest that he would provide the certainty, and not just to the markets, but to many Americans who have been really overwhelmed by what's been going on. But look for those debates, because I don't think Trump's going to take that lightly.
He is not, Kevin. He's not getting a free pass on this whatsoever. How does the former vice president convince the American public, the electorate, that he will be tough on China and trade when he was in the administration for 8 years and they gave them a pass on all of those issues?
Well, and not just when he was vice president, but also when he was on Senate Foreign Relations. So there's this whole record of his time in Congress as well that will be openly debated. Jonathan, I think today marks for the Biden campaign is a set of policy proposals that are going to come out, and I think the foreign policy one will be incredibly interesting to report on and to discuss as well. But as of now, it all comes back to those coalitions, and quite honestly, I think they've been enjoying the luxury of having President Trump being out there at the forefront and kind of, waiting in the wings, so to speak. So, I think today I'm going to be looking for a progressive reaction. What will progressives say on this front? And then moving forward, can he continue to unite the party but have progressives on his side in what is increasingly going to look like a moderate economic approach?
Kevin, great to catch up with you, sir. Tom Keene, this is where it starts to get difficult for the former vice president. The pandemic in America has been a mess. We can all agree on that. And the president has looked a lonely figure. That's allowed the former vice president to sit back and allow the referendum on this presidency to play out. As he steps in and steps up, that's when it starts to become a choice. And if the progressives push back against the moderate stance a little bit later, guess what? That is fuel for the president to say, this man is a Trojan horse for the radical left. Don't vote for him. And that's going to be the contest in the economy in the months to come.
Yeah, well, let's be clear, folks. And folks, I'll get it out on Twitter at some point. But Bloomberg led this morning with a terrific summary of this important speech by President Biden and Vice President Biden. And what you see there, John, that is so important is his team of economic advisors led by Jared Bernstein are clearly centrist in nature. I don't see economic advisors to him of the liberal left that President Trump would critique.
And I don't think the President of the United States, though, Tom, is going to allow the electorate to define former Vice President Joe Biden as a moderate. That's where the tension will be in the weeks and months to come, and that tension starts to build quite seriously a little bit later. From New York City this morning, good morning to you all. Equity futures down 1/10%. This is Bloomberg.
Order submitted. Order canceled. Order canceled. Order submitted. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order fell. Order submitted. Order canceled. Order canceled. Order submitted. Order fell. Order fell. Order submitted. Order submitted. Order fell. Order submitted. Order fell. Order canceled. canceled. Order submitted. Order fell. Order submitted. Order fell. Order submitted. Order canceled.
When everything around us, including the way we work and live, has been interrupted.
Order submitted. Order fell. Order submitted.
Peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume.
Order canceled. Order submitted. Order submitted. Order submitted. Order submitted. Order canceled.
From New York City with equity futures bouncing back, we're live on Bloomberg TV and on Bloomberg Radio. This is Bloomberg Surveillance alongside Tom Keene, together with Lisa Ramis. I'm Jonathan Ferro. 2 hours away from the opening bell this Thursday morning. Good morning to you all. We bounced back a single point on the S&P 500. Really choppy price action through the week so far, but one dominant factor in all of it: big cap tech in America absolutely dominating. A little bit more on that a little bit later. In the bond market, Treasury yield shaping up as follows. Around about 60 minutes from the claims data in America, we come in a single basis point on a 10-year to 0.65%. I'm going to skip over what's happening in foreign exchange and get straight to the gold market. What a story over the last several months. Flat on the day, Tom, but 1809 is where we trade right now.
Yeah.
That has been one of the stories of this market in the last several months.
I'm glad you mentioned it, 1820 earlier. 1880-ish, 1890 is a 2011 high, so we're a little bit distant from that. I'd also note renminbi stronger, goes through 7. CNY goes 702, 7.00 to a 698 at one point this morning. Right now, get out the calendar. It is July, and it is July-ish on the way to, well, you know, earnings season. It is total chaos, but we need perspective, and we get that from the Bank of America and their equity strategist, Jill Carey-Hall. Jill, there's 8 ways to go here, and I love the detail of your research note given the present chaos. I want to go to somewhat minutia, which is the wiggle room corporations have with capital expenditures. The way they do this is they reduce them in crisis. Is that what's happening now?
Hi, yeah, thanks for having me. Definitely, we're seeing that, overall corporate cash deployment has come down. We've seen about 20% of the S&P 500 suspending buybacks. We've seen a little over 10% of the index suspending dividends. And then CapEx has really been an area that corporations have cut back on. When we look at, what happened last quarter, CapEx spending was essentially flattish. And then this quarter, we think it'll continue to remain weak when we look at CapEx guidance, which some companies will give on their planned spending. That's been extremely weak. You have very few companies, giving it now to begin with as overall guidance has grown scarce. Well, but for the ones that are, it's pretty close to 2009 levels. So there's sort of that disconnect between the improvement we've seen in the ISM and companies are still very negative.
What I note, Jill, is Mr. Buffett and Berkshire Hathaway take out Dominion, and Dominion is actually going to deploy the billions from Mr. Buffett over to a more conservative tone on their balance sheet. Would you expect that to happen throughout all of corporate America?
Well, I think what we've seen when you look at, the Bank of America Global Fund Managers Survey, investors have really honed in on companies' balance sheets. There's a lot of leverage out there, particularly down the market cap spectrum. So investors have been wanting companies to use their excess cash to clean up their balance sheets. over other cash uses. Now, we have been in this lackluster CapEx environment, so, I think there is sort of a demand for that as well, where companies can invest in areas that it makes sense. And certainly that's beneficiary for companies, whether it's tech CapEx or more traditional industrial CapEx. But I think right now a lot of companies are really economic conditions continue to improve. We'll be watching the guidance closely to see if that can suggest a pickup.
Jill, we're seeing that this morning. Walgreens coming out, cutting over 4,000 jobs, suspending the share buyback. Saw it yesterday evening. Bed Bath & Beyond cutting stores as well. We see this every single day. Is this why you think we need to own the mega cap stocks with the strongest balance sheets versus the small cap stocks with something a little bit more fragile beneath the surface?
Yeah, so we continue to prefer large over small caps right now. I think, overall the fundamental backdrop is still much weaker down the cap spectrum. So this earnings season, which kicks off next week, large cap earnings should fall about 40% year over year. Small cap earnings are going to be falling a lot greater. Analysts are looking for about 100% year over year decline in earnings for small caps. So even though recovery certainly benefits small caps, so if we see a more sustainable recovery and we stop seeing a pickup in cases, that could be positive. But obviously the fact that there's a lot of fear right now about the rise in cases. Small caps have been generally underperforming again since early June. Escalating trade tensions are another risk there, and one of the key reasons smaller stocks underperformed in 2019. So you also have really expensive valuations, not across the cap spectrum, but for small and mid caps, they're at record highs right now. And a lot of the economic data on reopening suggests you're starting to see stalling or decelerating trends for small businesses. So, as you mentioned, balance sheets are a lot cleaner for larger stocks. You have a lot higher quality for the S&P 500 relative to small cap benchmarks. So, that's still something we're thinking about right now. But certainly, if you are an investor in small caps, still opportunities. If we do see a bit of a tactical rotation into value, that's something we expect could work across the market. But being more selective within small caps makes sense, just given that a lot of the value stocks within small caps have become increasingly synonymous with leverage and risk.
Jill, your comments make a lot of sense. Your caution makes a lot of sense with the bigger picture of the pandemic and the accelerating job losses in some sectors. At the same time, valuations have reflected this, and there's a theory out there put out by JP Morgan that really the surprise could be to the upside if we get a stalling out of the pandemic or better than expected data, and you could see the small caps rally and some of the larger caps, the mega tech stocks, sell off given where valuations are. Why is that flawed in your opinion?
Well, I think if we do see a much more sustainable recovery, that is when we've looked at size and style performance, you do tend to see small cap stocks, value stocks tend to rally during those early recovery stages of the cycle. So we obviously saw some early innings of that, and now that's called into question. I think one risk this time is that small caps were just a lot worse positioned going into this crisis than they were going into a lot of the prior recessions. They have record leverage ratios that they've never had before. They've benefited from QE and all the access to cheap capital. They're a lot lower quality today. So order submitted. Order submitted.
Order canceled. Jill, this is a huge deal. Come on, we've got this company, John Farrell mentioned Boots out with layoffs. We got Walgreens with layoffs, and on and on and on. There's going to be a job carnage out there. The Chancellor of the Exchequer spoke about it yesterday. Vice President Biden's going to speak about it today. What is the elasticity of those job cuts to the revenue line of small, mid, and large cap? The answer is small cap's going to get absolutely crushed on this, right?
Yeah, I mean, I think the labor market backdrop and like I said, the data we've been seeing kind of stalling and decelerating for small businesses is a big risk.
Order
for
canceled.
The market, we think there's a lot of risk of, just payback risk as we've seen all the stimulus and moving out into year end, and then as volatility picks up around the election. So, we're at this point, even for the S&P 500, the market's trading above our 2,900 target for year end. So we're more neutral on equities at this point, and think it makes sense for investors to really kind of pick their spots.
Okay, the one final question then, and folks, I'm distraught this morning because I have my pasta maker on order at Sur La Table, and they announced they're going bankrupt this morning or last night or whatever, and I'm never able to make the pasta to have Faro over so you can get some really good quality Tom Keene Italian pasta. That's all great, but it's going to come in an Amazon box. What does the CapEx reduction, what do the job layoffs do to the top line fundamentals of Apple and Amazon and the others? Are they immune from this dynamic?
Well, I think, and Amazon and some of those companies are actually the ones that have been CapEx spenders during this current crisis. Order
canceled.
But then in terms of CapEx beneficiaries, you've certainly seen kind of a slowdown across the board in terms of both more cyclical CapEx spending from the commodity complex and then overall spending on tech. But if we are in a more permanent work from home type of environment, certainly some of the mega cap tech companies have benefited. We're equal weight tech overall. We think tech looks very positive fundamentally, strong balance sheets. But obviously that's one sector where there could potentially be regulatory risks. Order So as we go into the election, that's one of the reasons we've just been equal weight, in addition to obviously the very strong
order canceled.
Jill, brilliant catching up with you. As always, love hearing from you. My best to you and the team at Bank of America. Say hello to Savita for us as well. Jill Kerry-Hall there of Bank of America. Some really great Tom Keene Italian quality pasta. There are two words in that sentence that don't belong there. First word, Tom. Second word, Keene. I can confirm I've tried that pasta a few times over the years at Casa Keene. Tom, let's talk about the cuts. Let's talk about the cuts. The second wave of cuts is something a lot of people are worried about, and it's serious. It's the second shock for this economy.
And John, you were brilliant yesterday on the Chancellor of the Exchequer squeezing through. I thought the Telegraph, the Guardian, all of them did a great job today in their analysis. Carl Weinberg, John, was brilliant on this weekend at High Frequency Economics. And this is the tip of the iceberg. Forget about United Airlines, Walgreens. I mean, they're all going to be taking marginal cuts. And John, I'm sorry, it will devolve down to the revenue line of consumer product companies instantly.
We'll talk about this story a little bit later in the program from New York City this morning alongside Tom Keene together with Lisa Bravitz. I'm Jonathan Ferro on Bloomberg Radio and on Bloomberg TV. This is Bloomberg Surveillance.
With the first word news, I'm Rishka Gupta. The number of coronavirus infections worldwide has now gone over 12 million, and a fourth of those have been in the U.S. By one count, the U.S. set another record for new cases yesterday with more than 59,000. Texas and California accounted for almost 14% of them. The Supreme Court is expected to rule today on President Trump's tax records, the issue whether Congress and Manhattan District Attorney can see tax returns and other financial documents the president has fought to keep private. The president has lost so far at every step, but the records haven't been turned over pending a final court ruling. China's top diplomat blasted U.S. policy towards Beijing. Foreign Minister Wang Yi accused the Trump administration of being driven by, quote, McCarthy-style paranoia. He proposed a blueprint for getting relations between the two biggest economies back on track. Wang also called for cooperation on the coronavirus. In Israel, Prime Minister Benjamin Netanyahu is consolidating powers as he tries to rein in a second coronavirus outbreak. Parliament is giving his cabinet the power to take any decision needed to curb the disease, and the Domestic Security Agency has been given the authority to resume contact tracing. Netanyahu says the crisis requires extraordinary steps. His
Order submitted. Order submitted.
Walgreens Boots Alliance posted worse than expected results for the third quarter. As a result, the drugstore chain
canceled.
will cut 4,000 jobs and end share buybacks. In March, the pandemic prompted people to stock up on prescriptions and toilet paper. Since then, prescription volumes have fallen because of fewer visits to doctors, offices, and hospitals. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Order submitted. Order canceled. Order submitted. Order submitted. Order canceled.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Travel, we did not know when it was going to return. And we knew that when travel returned, it would be different. It would never be the same.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
In a sense, all developed economies are now seeing very, very loose fiscal policy, very, very loose monetary policy. So, you know, who are you going to depreciate against?
BlackRock's Rupert Harrison there. You've seen the loose monetary policy. We've witnessed the loose fiscal policy. Who's going to try and devalue their currency? and what against. From New York City this morning, good morning to you all. Alongside Tom Keane and Lisa Abravis, I'm Jonathan Ferro. In your equity market, up a single point on the S&P 500. We advanced not even 1/10%. In the bond market, Treasury shaping up as follows. Yields come in a single basis point on a 10-year to 0.65%. And just to give you a quick feel of foreign exchange, in G10, the dollar is weaker. The euro advancing just a little bit. Cable firmer by 0.25%. Front and center for me, Tom. We talked about it at the top of the program. The first shock was all up front at once. It was the lockdown. The second shock is the persistent water torture of being below capacity for an extended period of time. And companies have got to react, and they're reacting in the last 24 hours.
No question about it. What we try to do with our great booking team here at Bloomberg Surveillance, folks, for radio and for television, and give you the right guest at the right time. We do that this morning with Claudia Sahm. If you don't know her, you should. She's out of Denison. She studied under Shapiro and Kimball at Michigan, which in itself is a really twisted thing. And we're thrilled that Dr. Sahm could join us today because she is outrageously frank about the state of labor and housing economy right now. Claudia Sahm, thank you so much for being with us. Joe Biden is going to go out today, and he's going to give a speech to drag the Democratic Party back to the center. In terms of economic policy, Dr. Sahm, can he succeed in doing that?
Well, first of all, thank you for having me on the show. In terms of whether Joe Biden can succeed, I just want someone to succeed that is in Washington, D.C. So he's in a position to help set an agenda potentially, but we need Congress, members of Congress and the current administration to act. Like, they have got to send out more money this summer.
How does a Democratic voice, and clearly you're associated with that form of politics, and that I understand Jared Bernstein working with Vice President Biden, how does Democratic economic policy sell to disaffected Republicans? How do they do that? How do they pull free market Republicans over to a more government-centric solution?
Democrats don't need to. The American people are pulling all of us towards policies. We have millions of families that are struggling. They have lost income. We have small businesses failing. We have state and local governments in absolute budget crisis, and we do not have the public health issues under control. You don't need anybody in D.C. to tell you we have a problem. We need D.C. to really figure out how to act and do something. And I will say there's a long-standing adage that we are all Keynesians in a foxhole, right? And we are deep in this foxhole. And so we saw it with the CARES Act. Republicans and Democrats came together, and they went big, and they absolutely have to do it again and more, I think.
More money, and this is something a lot of people are saying. The question is, how do you direct that money? What are these policies? And one thing I believe that you've advocated for is to send more checks out to Americans, basically additional helicopter money rounds. And a lot of people saying getting closer and closer to modern monetary theory, MMT. Why is this the approach that you think is what's required here rather than a targeted approach to encourage employment?
At this moment, we need an and both policy approach. We absolutely need to get money to those families and businesses and communities that are hard hit. We absolutely have to extend the enhanced jobless benefits. And we need to go big and broad. To go big, to pump hundreds and billions and trillions of dollars into the economy, you have got to get it to everybody. And that's the reason that I think that the rebates, another round of recovery rebates, would be highly effective. And we know, I have research already on the 2020 rebates, these things worked. So let's do more of big support. And we do it in a recession. This is the moment where many economists from left to right and those who have been at the frontier of modern monetary theory, in a moment like this, we all hold hands because we're in a recession and we have to get us back to full capacity, get people back to work.
All right, all holding hands, perhaps, and no one is a deficit hawk anymore. There is a question, though, when you start spending this amount of money and deepening the debt load, at some point, even if you don't see a spike in borrowing costs, which, to be clear, we are nowhere near that. Borrowing costs are near record lows. At some point, it does drag on growth. That does seem to be what studies show. How big of a concern should that be? I understand that right now we've got a serious five-alarm fire. At the same time, should we be concerned about how much we spend and the deficit that we incur?
Absolutely not. Not for the United States. We are in a privileged position. The studies that show that high debt loads blow up, those are not based on the United States. Those have not panned out in our experience. What we saw in the Great Recession and what we are seeing right now is the cost of going too small is just, it's massive, and it lasts for decades and career-long, like lifetimes. It's just,
Claudia, you're too modest. Claudia, you got to stop with the bashful modest stuff. 2012, Sam Shapiro-Slemrod, you did the definitive research out of Michigan on the efficacy of stimulus by paycheck. Clearly, President Trump wants this. Do we do better by stimulus directly in paycheck, or is there a better Claudia Sam path?
We need to send out money. We need to just get it in people's bank accounts. The unfortunate reality today is we have millions of Americans not getting a paycheck, or their paycheck has been cut. We know from after the Great Recession, the payroll tax cut was the least effective. The making work pay tax credit was less effective than the 2008 tax rebates, right? So we know that the best thing to do is just send out money. And in this environment, putting it through payrolls is a real problem. I'm all for keeping businesses going so there are jobs to come back to, but the way to help workers and families is getting the money.
Claudia, appreciate your insight this morning. Really important perspective. Claudia Sam, the Equitable Growth Director of Macroeconomic Policy. Tom, important decisions that need to be made, and we saw some of them made yesterday in the United Kingdom. Just a flavour of how policy is going to evolve in the months to come.
What do you think? What do you think, John? Give us a quick redo on that. What do you think?
I think he came up with some smart policies to incentivize rehiring. If there's criticism, Tom, at $30 billion, it might not be big enough. And I don't think even the Chancellor thinks his job is done. Most people assume he's got to come back. And even after this month, once Washington does what Washington's got to do, most people assume Washington will have to come back as well.
John, that's clearly what I heard from Anna Edwards this morning, the idea that there's got to be another round sooner.
Setting you up this Thursday morning for the price action. Not much of it right now. Choppy overnight in the equity market. Futures unchanged. From New York this morning, good morning. This is Bloomberg Surveillance.
The food prices have never been as high as that over 9 years of conflict. And people tell us that they can't afford to buy food on the market. Imagine They're not waiting to buy a television or sports shoes. They're waiting to buy food. Parents can't afford to feed their children anymore. They're cutting meals, they're selling all their assets, and they're giving them less to eat.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The economy's not ready to be taken off of the ventilator here.
It's got to be the real economy that performs. Otherwise, none of these companies are going to be able to make it through to 2021.
The COVID virus and survival economics has blinded a lot of investors about what are the global tensions going on. And right now, the biggest global tension is the war between China and U.S. for sort of global positioning.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. Our simulcast on Bloomberg Radio, Bloomberg Television from New York and across this nation today. Any number of themes, but there are two front and center right now. The Vice President to speak in his Scranton, Pennsylvania. We'll see that later in the morning. Before that, in this hour, we'll see jobless claims, well over 1 million widely expected, and all of that devolving into the layoffs here, the layoffs there, the layoffs presumed to come. It really sets us up for an American labor economy that must be addressed. And of course, with that, the market reaction as well. John Ferro, the news flow has been really odd recently and really crescendos this morning into these announcements of job cuts at too many companies.
By any standard, Tom, we're in a labour market crisis. Despite the sequential improvement we see over the last couple of months, there is a ton of work still to come. And what we've seen from the big companies is they're starting to right-size the business. Mohammed Al-Arian was on the programme just a week ago talking about this. This was the fear. The second wave, Tom, the job cuts, the companies turning around after the shutdown and saying, you know what, this new world, we have to cut into it because we're not returning to normal anytime soon.
And what's so interesting here, and Lisa Abramowitz, you highlighted this yesterday, that successful 10-year auction at an ungodly rate under 1% as well. I believe if I have diminished growth, if I have layoffs, Lisa, that migrates towards ever lower yields.
It shows the limitations of Fed policy and just pushing borrowing costs lower, frankly, because United Airlines saying that they could lay off as many as 36,000 employees yesterday. Walgreens Boots Alliance coming out today saying that they are going to cut 4,000 jobs. These are not going to be jobs that are saved by lower borrowing costs. These are jobs that could only be saved by an economy accelerating and people going to stores, buying things, getting on planes, which they're not going to do in the same kind of numbers as they have for years. So, Tom, again, this gets back to the real economy. When can we get it back going again? And not just how much money can we pump into the system?
Well, it will be most simple. The data check right now, John will give you a better data check than me in a bit, but all you need to know is that same churn in equity markets moving towards 930, and you wonder if we'll see green on the screen by then. I'd also know gold up at 1820, not near the 2011 high. And the big news in FX with that stimulus and better feeling in China, renminbi stronger and through 7 yuan per dollar. Right now, a joy to welcome Jeffrey Yu. He is with BNY Mellon as a senior strategist, and we're thrilled that Jeff Yu could join us from London this morning. Jeff Yu, it's stimulus here, stimulus there, stimulus everywhere. Is it a proven prescription for better economic growth?
Well, actually, if you look at what's going on in Beijing right now, relatively, they're not doing as much stimulus. I mean, that's been a question. But if retail can help with the stock market, then why not? So I think the jury's still out. It depends on what kind of stimulus. But looking at sterling today, it seems like markets believe in it.
Jeff, we've heard this argument again and again and again over the last week or so, that the reopening elsewhere is more efficient, the recovery is more dependable. You want to tilt away from the dollar. I've lost count how many people have told me that in the last several weeks on this program and elsewhere. Does it resonate with you, Jeff?
It does to some extent, but probably less of a fundamental story, but more of an asset allocation story. So you can, yes, track the differences in terms of the opening and performance, but the fact is markets have been overweight US equities, overweight dollar cash, and it's the best part of the last 3 or 4 years. So that's where the adjustment needs to happen, and that alone would undermine the dollar, and you have the economic argument to complement it. So net-net, yes, I think it is a dollar weakness story, but it's going to be choppy, and I'll focus on equities as well.
Well, Jeff, let's talk about where you'd push that view and through what currency pair at the moment. Is this a story where we'll see flows build into Europe, where we start to see an appreciation for China again and the mainland? Where do you see it going?
I would certainly favor Europe over emerging markets right now. So Europe has a positioning story, but also has a valuations and story in terms of China. So, yes, we do, see the price action right now. But let's remember the arguments in 2014, 2015. Is there an earnings picture? And on top of that, is there a balance of payments picture? I would argue the latter is positive in renminbi right now. Services balance is really improving, but we need earnings to follow up. And again, broader EM still very fragile right now. So I'd still focus on the well-performing DM, and that's a euro for the time being.
Jeff, on one hand, you've got this liquidity story pushing people further into risk and saying perhaps it's time to go further into Europe or emerging markets. And on the other hand, you've got an increasing number of people on bubble watch. I want to talk about the key center for bubble watch currently, which is the Chinese stock market. You've seen an absolute surge there with people saying, I can't lose. I'm just going to pour all my money in because it seems like Beijing has my back. How much more do you see that rally going?
Well, it's interesting that they would view that and Beijing has their back, and I would say the PBOC, the regulators would argue otherwise. They're not providing liquidity